Ooh, I can hear the stream on your side. It's very loud. Yeah, okay, that has started. Yeah, we're live. All right. Hey, what's going on, everyone? First of all, welcome to the first SMC live stream. I'm very excited to have the show with you guys. Just give me a minute quickly. I just quickly want to start the stream manually on TikTok. As I can't do it through Streamlabs, but just give me a second. I just want to start it on TikTok. Then we can get started with, usually what I do with my members every single morning, we'll just go over a trade plan, markup, top-down analysis, give you some insight into understanding price, the overall context of what price is doing. So yeah, we'll cover some really nice gems for you guys in today's stream. But yeah, just give me a minute. Just going to quickly start this on TikTok. Everyone just type in chat if you can hear Hein. It's our first time using Streamlabs, so it was a bit of a mission to set up, but we finally got it. Can't hear Hein? Let's give a sec. Speak there quickly, Hein. Just test if the people can hear you. I've just quickly enabled.
Testing 1 2 1 2.
Sounds good. Okay, awesome. Just quickly starting the broadcast on TikTok. And then I just quickly want to put off.
I'm just testing one more time if you guys can hear me. Just type in the chat there. Oh, there we go. There we go. There we go. I like it. I like that. Morning, everyone. Welcome to the first live stream. Jay and I are very keen for this journey with you guys.
There we go. We're also live on TikTok as well. Okay, we can finally get started. Apologies, guys. Yeah, firstly, welcome everybody to the first SMC live stream. This is a show that we'll be hosting pretty much every single morning, 9:30, GMT +2 South African time, if there's quite a couple of people that's not from South Africa here. But yeah, I'm just basically going to go over chart markup, trade plan, top-down analysis, what I usually cover with my members every single morning. Hein and I both trade very similar concepts. Just a little bit of insight into my background of trading. I've been trading for about 6 years. Today, I'm a full-time structure S&D and also a little bit of a ICT concept trader, and I've kind of formulated my own mechanical system around approaching the markets, and also just to give you an overall understanding of the algorithm of price, how price moves, and how ultimately you can get involved in the markets, and also other topics of discussion here, such as managing risk. In the future, I'd really love to get some epic guests from around the world for you guys to give you insight into how they trade, into other people's journey, including guys like MentFX. I'm going to push my luck to try and ask ICT to join as well, maybe Q Banks. Purpose of the stream, just to really document every single morning, trade plan, markup, give you insight into the methodology that I teach to my private members, and also an insight into how you can start to learn to formulate your own trade plan and execute based on your trade plan eliminating emotions from the markets, and ultimately just giving you guys value and gems in this industry. All right.
Yeah, guys, I think it's only right if I also just quickly add a bit of my story. So I've been trading for almost 4 years now, full time for about 2 years now. I actually started off trading, more in support and resistance retail trading, and then actually discovered SMC about 2 years ago. And yeah, ever since then, I've been trading SMC content. I haven't really dwelled into the ICT so much yet, but keen to learn. Just to you have to open your knowledge to everything in this industry, I think. And yeah, ever since then, been trading a bit of SMC concepts. I do feel that I do take a lot less trades than Jay does. He focuses a bit more on the lower time frames than I do. I don't go down to the lower time frames as much. But yeah, you'll see in the future how we do differ in what we do look at, but it's very similar.
Yeah. Quickly making sure the stream is fine on TikTok, yeah? I think so, yeah. So TikTok has this thing where you need to get a stream code, but it's not available to everyone. But I figured out a way to kind of stream my screen off my phone onto TikTok. So I think that's working fine. So if the users on TikTok can hear me loud and clear, just type in the chat. Yeah, there's about a couple of viewers on TikTok as well. But yeah, let's get started with EURUSD. So the way that I approach markets, just to quickly give you a brief understanding of how I understand price, how I formulate my trade plans based on the higher time frame, and then executing by reacting on the lower time frames. So first and foremost, as you've probably been taught in most basic trading courses, price will always move in the form of higher highs and lower lows. Okay? Now, the concept where a lot of traders get confused. Price does not always look like this. Within, for example, a higher time frame, let's use the 4 hour, we have forms of 4 hour legs, higher highs and lower lows, forming your overall swing structure. Now, within the 4 hour time frame, you have internal structure that occurs within your swing structure, also in the forms of higher highs and higher lows. Okay, and then even within the 15-minute structure, we have lower time frame, tiny, smaller 1 minute and 3 minute structure. Now, how my entire trade plan works is, and a lot of my members that are from MM Funded will understand the 3 structure types model, which identifies, well, your 3 structure types, where I always start off on the daily time frame, just to get an overall context before immediately hopping into that lower time frame when going into session every single morning. Okay, so immediately on EURUSD, we have had a daily swing break of structure to the downside. After every single swing break of structure and lower time frame break of structure as well, price will always incur some kind of pullback phase, whether that's into the discount of the swing range, into previous areas of SND levels, into fair value gaps, to then follow through the expectation to continue targeting those weak lows. So yeah, as of the beginning of October, EURUSD started that 4 hour pullback and the daily pullback, which we identify with the 4 hour time frame. 4 hour is our daily internal, which we confirm the daily. The 15 minutes is then our 4 hour internal, which we confirm the 4 hour. So after that daily break of structure, we created that 4 hour break of structure to the upside, which then pulled back into the discount of this range, SND level, to continue targeting these 4 hour weak highs. Again, 4 hour pullback due, mitigation into SND, which again will dive now deeper into this price action on the lower time frames, where we can start applying our entry confirmation models to continue targeting those weak highs. As of NFP now this month, we continue to target those weak highs as per the expectation, mitigated older areas of supply to continue with a bit of a pullback, mitigated the demand fractal range of this entire swing range to again continue targeting these weak highs. So now at the moment, as EU lies, we've actually mitigated the entire premium of this entire swing range, which now we have to keep in mind, the expectation of price on the daily swing structure is to continue targeting these weak lows. But we confirm that once the 4-hour starts to shift bearish, putting supply in control, which then again, we can look on the lower timeframes to get involved to continue with the expectation of order flow. And again, if you want to get more context on what the daily is doing, you can hop onto the weekly. So most recent on the weekly, we've had a weekly break of structure to the downside, our weekly strong protected highs. So the expectation is for price to respect these strong highs and to continue targeting these weak lows after this pullback was confirmed with this daily swing shift to the upside. Price then started with internal bullish structure, understanding that this is just catering for a weekly pullback. We have now mitigated the premium of this entire range. That daily time frame has now shifted bearish, which is also our weekly internal, giving us potential confirmation that the weekly order flow is now going to follow through and target these weak lows. Okay, so that is why, even although EU at the moment in the interim has a lot of bullish momentum, the overall order flow is still bearish, because the expectation now is, and you don't need to worry about predicting this, and this is something I'm going to cover in a bit with you guys, is teaching you how to rather react instead of predict price. I see Heiner's just hopped off stream. Okay, I'll continue.
Can you still hear me there, Jay?
Yeah, I can hear you.
Yeah, I don't know why it's not there. Eh?
Okay, we'll worry about that a little bit later. I'll see if I can add you back now. But yeah, as I was saying, the overall expectation is now for EU to mitigate premium areas of this entire swing range, to then start confirming on the lower timeframes, to start targeting these weak lows, follow through with that order flow, to target the internal weak lows, and to continue following through until we mitigate and target those weekly weak lows. Now, even if you want to get more context on the weekly, we can take it a step further. We can hop onto the monthly. If we have a look most recently at the monthly break of structure to the upside, monthly strong low, and then about nearly 12 years later, we had that pullback, the internal shifted bullish, which was confirmation to continue targeting these weak highs. In 2008, where the economic crash happened here on EU, all right, all that economic crash catered for was just the start of the monthly pullback. We confirm the start of the monthly pullback when weekly internal structure breaks to the downside. Internal pullback into supply to then follow through that bearish momentum to mitigate the overall extreme of this range. Okay, so what I'm trying to say is, and I install this in most streams when I'm on stream with my members inside of the Discord community, is that news doesn't move the markets. The markets move the news. The markets will always follow through with its institutional structure, order flow, and ultimately will confirm itself via the orders sitting at supply and demand. All right. So that economic crash that happened in 2008, all that catered for was just a monthly pullback, which was due after the previous break of structure, which then we could have understood our expectation over here that we can expect a bit of a bearish shift, looking to get involved on these pullbacks. Opportunity again for a continuation entry to look to continue riding price into the discounts of this entire range. Okay, so now fast forward, this was to 2008 all the way now to 2023. Also 15 odd years later, we've now mitigated the extreme of this entire monthly range. We will confirm this monthly order flow to follow through once these weekly strong highs start breaking to the upside. Once that confirms, we get that weekly break, we'll have demand in control, will be good opportunity and good probability that price will start to eventually target these weak highs, and that I'm talking within the next at least 5 to 10 years. Take notes, guys, just quickly reading through some of the comments here. All right, are you guys all with me in so far the idea of how I approach structure in a more mechanical way? Ultimately, my 3 main timeframes for structure is the daily, 4-hour, and the 50-minute. And then you can always use the weekly to get just a bit of an extra understanding of why the daily is doing what it's doing, and then vice versa with the monthly. So do you guys already have an understanding, just looking at the higher timeframes, a bit of a clearer context of where EU is looking to move within the next couple of years. Yes, with you. Awesome, guys. Yeah, so a lot of the guys that are new to my streams, especially a lot of the guys that haven't really watched my content before, I know a lot of this will be foreign. It's perhaps a lot to take in. But what I recommend is before hopping onto these streams in the mornings, I've got an entire free YouTube course just on my channel. There's a playlist at the top of the channel that will go over these concepts a lot more in depth so that every time you hop on stream, you just have a bit of a better understanding of what I'm talking about. Okay, alrighty, so let's quickly come back to the daily. All right, daily break of structure, prices continued bullish internally, just catering for a bit of a daily pullback. The overall expectation, I'm talking about perhaps the rest of this year going into next year, is eventually for that 4 hour to start shifting bearish, to then follow through internally to target those overall daily week lows. Okay, so from the daily, we can then hop over to the 4 hour. All right, as I've mentioned over here, the 4 hour swing is currently bullish, understanding that it's just catering for the daily pullback. So as of the beginning of October, we created that 4 hour internal shift to the upside, internal being the internal of the overall daily swing leg. That 4 hour pullback started off older areas of supply. And this is where, and this is something that took me quite a couple of years to understand before getting this right, is where a lot of traders make the mistake, especially supply-demand traders, looking for shorts of clear supply zones, whether that's a supply zone up here, a supply zone up here, that's created the break of structure with the liquidity buildup, the inefficient push. And the mistake that a lot of traders look at is looking for shorts of these older areas of supply without understanding what order flow is doing most recently. So if we have a look, as soon as the 4 hour swing structure broke structure to the upside, these demand areas immediately come into control. These older supply areas will just really cater for that 4 hour swing pullbacks into demand that's rather in control to then rather continue targeting those weak highs. And this is something, when I say it took me quite a long time, years to understand, is the ultimate difference of being on the wrong side of the market and being on the right side of the market. Okay, so let's quickly run through what EU has done for the past couple of the last 2 months in terms of the 4 hour swing structure. Then we can start diving into the M15. Then hopefully you guys will have a really clear understanding of EU and also just in general of how I approach price all the way from the monthly to the 1 minute. Okay, so 10th of October, we had that 4 hour break of structure to the upside. That pullback after the M15 swing shifted bearish, confirming we're now due for a bit of a pullback phase. So what can we expect after that pullback has started? Well, it's always best probability when price pulls back into the discount of this range, because then we can start to expect the internal to start shifting bullish, internal break, internal pullback into demand, to continue targeting these internal weak highs, internal pullback, to continue targeting those weak highs, and eventually the overall swing weak high. And the same thing on Monday, 23rd of October, we targeted that 4 hour weak high, 4 hour pullback started, we mitigated extreme areas of demand. And this is also where you can start to incorporate liquidity concepts into your supply and demand levels. So one thing I want you guys to make note of, I'm going to quickly open up a notepad here on screen. A supply and demand zone needs to have the following 4 criteria to make it a really high probability institutional level. Okay, firstly, that is the zone must be unmitigated. Meaning, if we mark out a valid demand zone, for example, we can mark out this valid wick zone over here, price must have not pulled back to the zone in the past in order for it to be unmitigated. If price has pulled back into the zone, reacted off of it, this zone would have been considered mitigated. Okay, so let's look at an example. Right over here, we had a valid demand zone. Price tapped into it, reacted. So in the future, looking for longs of this level, this is not a valid supply and demand zone because it's already been mitigated. Okay, so that's point number 1. point number 2, the SND zone needs to create a FEG or a inefficient push. Okay, there's many different terms for a fair value gap. There's imbalance, there's fair value gap, there's inefficiency. At the end of the day, it's all really the same thing. Okay, so for example, let's again use this example of the S&D level here. If we take the 3 candles after that, so candle 1 on the demand zone, candle 2, candle 3, what we want to look for is the high of the first candle and the low of the third candle. All right? As long as these wicks are not overlapping, this is a valid fair value gap. That means this supply or demand zone has created an inefficient push, which is point number 2 that makes this a higher probability institutional level, as there's a big difference between supply and demand and institutional levels. As supply and demand occurs everywhere in the markets, you can mark out this is a supply, you can mark out this is a demand, you can mark out this is another supply, you can mark out this as a demand, and they are absolutely everywhere in the market and they form all of the time. And that is where, again, a lot of S&D traders, what they look for is the most obvious order block that creates the break of structure, but each and every supply and demand zone that you mark out needs to have a reason for being a supply or demand zone, such as, is it in line with your institutional structure and your 3 structure types? Has it created the inefficient push? Is it unmitigated? And that will lead us to point number 3. It needs to create a break of structure or a change of character. And then the 4th point, which I'm going to cover now, is the most important for a supply and demand zone. All right, so for example, on the 4-hour time frame, a 4-hour S&D level needs to create a 4-hour break of structure. Vice versa for the daily. A daily supply or demand zone needs to create a daily break of structure. A 15-minute needs to create a 15-minute break of structure. So it needs to be correlated with its time frame, because perhaps if we mark out this, let's say, as a 4-hour demand zone, all right, and it created this lower time frame 15-minute break of structure, but it did not create the overall 4-hour break of structure. Therefore, that would not be a valid S&D zone. Okay, so for example, this demand zone here that we're using for the example of this S&D level created an internal break here and the overall 4-hour swing break of structure. And you can check off your list as you go along. It's unmitigated. It's created a fair value gap here. It's created a break of structure. And point number 4, it needs to have inducement or a liquidity buildup. Okay. So in the example of a liquidity buildup, let's use this S&D level here. Okay. So when you see a supply or demand zone that now has created the break of structure, the inefficient push, is unmitigated, but has clear inducement or liquidity sitting above or below it, this S&D zone has a much higher probability of catering for a liquidity sweep. For example, these lows over here swept this double bottom liquidity into this S&D level to then internally shift bullish to continue targeting those weak highs. So every single S&D zone that you mark out needs to have these following 4 criteria in order to be a valid institutional level. Okay, so do you guys understand these 4 criteria? This is something that is the first thing that I taught my members, because it's so important when applying these 4 criteria to your S&D levels, and it will eliminate all of the noise and really help you identify the higher probability institutional levels. Okay, everybody kind of understand the 4 criteria that makes an S&D level high probability? The liquidity resting above zone, so powerful. Yeah. Awesome, guys. Okay. Alrighty, so let's fast forward price to where we're resting today. Alright, price most recently, just after NFP on Friday this month, we created that break of structure. We targeted those weak highs as per the expectation. We then mitigated all the areas of daily supply, but understanding these supply areas are not going to continue price following through all the way to these lows or these 4-hour strong lows down here, because simply it's against the order flow. These older supplies here, here, and up here, and up here, we can start to anticipate the pullbacks of these swing ranges, but until that swing structure shifts bearish, then we can anticipate the bullish pullbacks to start continue targeting those weak lows. And once this realigns itself with the overall daily swing structure, we can then expect price then to continue targeting those daily weak lows. Okay. Alrighty, so CPI kicked in on Tuesday, catering for a very hard bullish momentum push. But again, all that news catered for was the pro trend of the 4-hour to continue targeting these weak highs to again ultimately mitigate these older areas of supply fractal ranges to start catering for the pullback. Okay, so I want to give you guys a quick insight into my lower time frame entry model, which I call the Asian liquidity model with the accumulation, manipulation, distribution confirm, which ultimately itself needs to be paired up with the understanding of your structure and inside of higher time frame POIs. And again, that is something that I have found, especially a lot of ICT traders make, errors that they make. And I've discovered this upon years of backtesting ICT concepts. About 80% of the time, I found myself on the wrong side of the market, especially when I'm backtesting, for example, mechanical silver bullet, the accumulation distribution, Judas swing. There's many different models that ICT teaches. And I found upon backtesting, there's been so many times where I'm trying to, for example, sell in a bullish market and vice versa, trying to buy in a bearish market. But now what I've started to put together is this entire mechanical structure model, which at Funded we call 3 structure types, in line with a bit of ICT concepts inside of higher time frame institutional levels. And that entire system as a whole kind of switched my entire trading career and how I really was able to keep on the right side of the market. Okay, so if we have a look now where we are currently on the 4-hour time frame, we've had that 4-hour break of structure to the upside. What can we now expect from price as we're starting to mitigate older supplies? Well, one of two things is for a bit of a pullback to occur, at least to the 50% of this entire swing range, for the internal to start shifting bullish, to eventually continue catering to target those 4-hour swing week highs. But understanding that all of this is just catering for a bit of a daily pullback, the eventual expectation is to target those 4-hour strong swing lows, which will then confirm that the daily has now shifted pro trend, the pullback's now over, and we can start to target those daily weak highs. Okay, so can you slowly but surely see, as I'm breaking down price for you, how once you correlate the time frames, you can really start to get a crystal clear understanding of exactly where price needs to go without even looking at the lower time frames yet. Okay, so yeah, once I break down EU, I'll hand over to Hein. He can also give you a bit of a breakdown of his system, how he trades. Yeah.
Am I just adding me back there, Jay? I don't know what happened there.
Let me give a second. There we go. I think Hein. Let me just quickly come back to the editor, studio mode, and then transition. There we go. Hein should be back.
Let's have a look. Just let me know if you guys can see me.
I can see he's back.
Okay. Cool. If you don't mind sharing my screen there, are you going to break down EU first, or are we going to switch over to my screen?
Yeah, I'm just making sure the members are happy with the current breakdown. Then I just quickly want to hop into the lower time frame with everybody on stream, just to give you a bit of insight into my entry models, what I look for on the lower time frames. Yeah. Okay. All right, let's move forward. I see Hein is on the live stream here. All is clear. Alrighty, guys. So already what you've learned so far, just from the way that I approach structure, what do you think is the current expectation of price, just looking at the 4-hour time frame? Keep in mind, we've had that 4-hour break of structure to the upside. After every break, we can expect the incur of that 4-hour pullback phase, which we confirm on the lower time frames, which is what I'm going to discuss with you guys just in a bit. We caught some buys of the Asia low liquidity model. Beautiful. Would you ever take any counter trend trades? I often do. Yeah, but the thing is, when you counter trend trading, that's where it's so important to manage your expectation of price. So for example, if we're looking to go short here, riding this 4-hour pullback, yes, it's 4-hour counter trend, but it's valid because the pullback phase is due. But this is where, if you, for example, we're going to go short here, we cannot really expect to target areas over here or areas down here or even the week low yet, because the 4-hour time frame hasn't given confirm to target these daily week lows yet, and the expectation is for a bit of a pullback to then continue targeting those week highs. Okay, so again, that's just where if you're trading counter trend, you need to still manage the expectation on your trade. Okay, so let's hop onto the lower time frames. Immediately, what I was looking for inside of this higher time frame supply, just to potentially look for phase C shorts, phase C being riding that pullback phase. We look at the M15 time frame, and immediately what I want to see is the internal start shifting bearish. So after we mitigated these higher time frame daily supply, we can start to expect that pullback phase to incur to at least potentially mitigate the discount of this entire 4-hour strong swing range, which we had that confirmation after these internal lows broke to the downside. Internal pullback, which is what core PPI catered for yesterday. So again, news catering for the expectation. News is really just the excuse to move price in the direction it was already going to go. And that's exactly, if you have a look at NFP, if you look at CPI, if you look at core PPI, all that catered for was either the start of the 4-hour pullback. For example, NFP at the beginning of this month catered for price to continue targeting those 4-hour week highs. So yeah, after core PPI played out yesterday, I was looking to enter off of a lower time frame entry model, which I'm going to go over now. So we had that internal break to the downside, internal pullback into supply areas, which I'm going to hop on for you now and refine that. All right, we continued to target these week lows, bit of a pullback potentially into supply here or here to continue short. All right, if we get our entry models, my following trade plan for this morning would ultimately be to sweep Asian highs into this area of supply, to look for my 1-minute entry confirmation model to continue targeting those week lows, understanding that all of this is just catering for a bit of a pullback phase on the 4-hour time frame. Okay. So yesterday, was it about 6 o'clock in the evening, I got tagged in my limit we had on the 1-minute time frame. Oops. Okay. What I was looking for after that M15 break to the downside over here, that pullback into this area of supply. Now, my entry confirmation model on the 1-minute needs to occur in a higher time frame POI. So this was the most recent. This little gray box that I've marked out, let me just put that back right there, was the entire supply fractal range that created the internal break to the downside, which potentially, why does it keep doing that? Which potentially signaled now the start of that 4-hour pullback. So we had that pullback into this M15 internal supply with the M15 internal strong highs, internal weak lows. On the 1-minute time frame, my entry model goes as follows. It's basically a form of accumulation, manipulation, and distribution. So what I like to see is price mitigate this entire supply zone, or my point of interest, is then form an initial reaction, ideally even a change of character, trapping in sellers on these areas of supplies, then what I like to see is a sweep of that high with a initial displacement fair value gap entry. Okay, so initial entry I took yesterday, this was about 3:30. I got stopped out for -1 at a 0.3% risk. Then again, I just waited for core PPI to play out and then formulated my trade plan after that. Core PPI created that new internal break to the downside, targeting these M15 internal weak lows. Remember, all of this just catering for the 4-hour pullback, as that pullback is now due. We then had also on core PPI, big displacement with a volume imbalance gap with the internal break to the downside. When price, for example, forms a large displacement like this, and let's say you're stuck with a supply here, another supply here, a fair value gap here, a supply here, my entries is always in the discount of the range. I will never take an entry confirm in the premium. Okay, so what I had in this limit here was, which this trade is still currently running, stops was above this candle, entry on this volume imbalance gap after the internal break, which then I continue to target just a mechanical 4R, because understanding this is swing counter trend. So that's why this is currently at BE, really just following through the 4-hour pullback. Okay, I will be 100% happy if this comes back to BE, we shift internally bullish, then our expectation will be to continue with a bit of an N15 pullback into demand to continue targeting those 4-hour weak highs. Okay, so one thing I want you to learn from every single trade plan that I take and the way that I approach market is I never predict price. I always react to what price prints for me. Okay, so for example, if price continues to target these weak lows, we create that new break of structure, we'll have supply and control, then I will look for my 4 criteria that makes the supply valid with a bit of a pullback, liquidity buildup, sweep of that liquidity, my 1-minute entry confirmation to then go short to target those weak lows. That would be trade plan 1. If price takes out those internal strong highs, all right, most recent strong high that took out the previous low, new weak lows, we then shift internally bullish, which then confirms the M15 has now shifted in alignment with the 4-hour to target those weak highs. Then my trade plan 2 will be a demand zone over here for a bit of a pullback with liquidity buildup, looking for the sweep, my 1-minute entry model to continue targeting those weak highs. That's trade plan 2. Now, until any of these trade plans happen, I don't worry about price. I don't get involved. I don't look at price. I will let it play out and react to what price prints for me. And this is something that I really try to install inside of my community and my members every single morning, is rather learn to react instead of predict. Okay. So do you guys have a decent understanding of my lower time frame entry model? In a nutshell, what I look for is as price approaches a higher time frame POI, is that mitigation. Okay. Mitigation here, the reaction off of that supply, ideally it must even create a change of character, then a sweep of that high here with the initial displacement, fair value gap entry to continue long. And this is what we call, well, there's multiple terminology, Wyckoff. There's another term called accumulation distribution, where price accumulates inside of a POI, sweeps that high, then creates the displacement fair value gap with the change of character, or as ICT calls it, a market structure shift with the gap to continue short. So this could be called Wyckoff accumulation distribution, or what I like to call it inside of my community, a fake change of character or a sweep zone. Okay, but at the end of the day, it's all the same thing, just different terminology. And that is my mechanical 1-minute entry confirmation, but keep in mind that is still paired up with the overall higher time frame understanding of structure, the institutional levels. So for example, this was the extreme M15 supply that created the internal break with the resting liquidity, for example. So it's valid to look for that sweep into this POI, then for the 1-minute confirmation to go short, but understanding we're going short here because we're just riding that 4-hour pullback. Okay, so every single trade plan that I make, every single entry that I take is based all the way from a real higher time frame understanding of price. And then again, just letting price play out and reacting to what it prints for me. Okay. So yeah, do you guys kind of, well, especially a lot of the new members that are here on stream today have a good understanding of the way that I approach structure, supply, demand, and this is basically now today my full-time career and what I do full-time every single morning. But I'm happy to let Hein take over and also give you some insight into the way he's trading, maybe some setups or trade plans that he's looking at this morning. How often does price run without you using this 1 minute confirm? Well, I don't really worry about that. There has been times where price runs without me, but if price mitigates my POI, sweeps that high, then kind of just runs off without me, then that's fine. No entry. Move on to the next trade plan. Forget about this. Don't let your emotions get involved, and you wait for the next play out to play out. Yeah, so what I'm also telling you is the way that I use my entry confirms is based on years of backtesting. I've backtested everything. I've backtested flip zones. I've backtested standard change of characters. I've backtested standard fair value gap displacement entries. This model that I'm using, accumulation, manipulation, distribution, gave me the best success rate in terms of results and in terms of entry criteria in my higher time frame POIs. So what I'll do is I'll backtest, for example, 4 months of data, let's say from July to today, using change of characters. Then I'll repeat that 4 months using, on the exact same zones, using flip zones. Then I'll repeat again using displacement fair value gaps. Then I'll repeat that backtest again and use my AMD model or my fake change of character. And that's how I formulate my data collection to determine what's best for me, and ultimately that's how you find your edge in the market. Do you find entries every day? I don't trade every day. So every single morning I will mark up my trade plan, the expectation of price, follow through my markup, and I will have my trade plan set out. But if that doesn't play out in the day, there's no execution. You move on to the next day. And that's ultimately when you start to trade on a trade plan, you keep yourself 100 times more disciplined when going into the markets every single week or day. Alrighty. You guys happy to let Hein take over? I know I've been speaking a ton this morning. Hopefully you guys still are kind of keeping up with me and have a good understanding. If not, don't worry, we'll be streaming pretty much every single day. So as the streams slowly but surely move forward, you will click more and more. And this is a big reason why I don't do signals, is simply because signals and relying on other people's trades will never reach to or lead to success in this industry. I rather will teach you how to be independent at this yourself. All right, I'm more than happy to hand over to Hein. I'm just going to quickly switch to his screen. There we go. You should be able to see Hein's screen.
Okay, perfect. Thanks, Jay. Just want to quickly just double check that they can see it on stream before I do get going.
Yeah, there we go. It has popped up on the stream.
Okay, there we go. No, okay, cool, perfect. Okay, so what I want to do to you guys is I want to simplify a few things. Okay, when it comes to my strategy, I never go lower than the 15-minute time frame. Obviously, that, like Jay, goes down to the 3-minute and the 1 minute when it comes to his entry models. But when it comes to
sorry, hey.
All good there, bro?
Yeah, I'm just quickly making sure the stream is clean on TikTok. I'm not able to look at the stream. Let me just quickly mute myself. Continue. Apologies, guys. I'm just making sure the stream is smooth on TikTok.
No problem.
You can continue your side. I'm just quickly...
Okay, no problem. Okay, so yeah, like I was saying, I think to clarify a few things would be very easy for you guys to understand. So there are only 4 types of entries that I take. We have a bullish continuation, a bearish continuation, a bullish reversal, and bearish reversal. Now, however, we do correlate these with higher time frame narrative, which is so important as we have to understand where we are in the market on the higher time frames. So just like Jay, my high time frames are the daily, and then internal are my 4 hour, and then 15-minute is the internal for the 4 hour. So I take all my entries on the 15-minute. And yeah, so quickly run through a few of the entry models that I do use. So your bullish continuation is obviously just following trend. So obviously you would have your higher time frame weak highs at the top of the year, as we only target the weak highs and the weak lows. So what I want you guys to see as well is just my entry criteria as well, which is must have valid liquidity, must have inefficient push, zone must cause valid break of structure. And then one important thing that I want you guys to understand is as well is the reversal entry models we only use the reversal entry models when we are coming off a higher time frame excuse me, higher time frame POI, which is then correlated with targeting weak highs as well. So coming back to the bullish continuation is just going through them very quickly is obviously we have our break of structure. And then over here, we would like to see our PO having an inefficient push or a fair value gap or imbalance, whatever you would like to call it. And then coming back, having some form of liquidity or inducement, and then taking our risk entries off this zone. And then what I want you guys to just emphasizing it again, this is correlated with 4 hour and the daily narrative. Okay, then we have our bearish continuation, which is the exact same, just flipped over, is our break of structure to the downside. So this would obviously be our valid break of structure that we have listed in our entry criteria, and then a pullback, and then some valid inducement or liquidity, and then getting tapped into our supply area here and taking a risk entry off there. So then coming to our reversals, because I feel like people do they don't understand the whole reversal thing properly. So what I want you guys to understand is with reversals is understanding your highs and your lows properly, because at the end of the day, a lot of this comes down to the basic things that you do learn when you start off trading, is understanding your higher highs, higher lows, and your lower highs and your lower lows. So a lot of the time, if I can just quickly draw something over here, we would have our break of structure to the upside, have another break of structure to the upside, and then we would have something like this. And then what I see a lot of people make mistake is they call this their change of character. Let me just quickly mark that out for you guys. They would call this their change of character. However, this wouldn't be valid, as this was our higher low, or our strong low, if you want to say that, or our weak high, or our higher high. Right. So a lot of people make this mistake, as this, however, this is an internal break of structure, but when it comes to swing structure, it is not valid. So we can then not look for a bullish reversal once it is broken, this low over here, and then target maybe a POI that is formed over here. This would only be valid as a reversal once we break this low, which was our previous higher low. So keeping that in mind, going back to the drawing that we did have over here, we have our break of structure to the upside over here. We have another break of structure to the upside over here. And then what I want you guys to understand is this would always be inside of a higher time frame. Let's just call this a 4 hour supply area. So we can't take reversal trades randomly in the market. We do have to have some higher time frame narrative playing along with us. So again, keep in mind, this is a 4 hour supply area over here. We get tapped in after we make our break of structure to the upside, change the character to the downside because we did break our recent higher low, and then we do have some inducement, and then take risk entries, looking for some sells for the market to then continue to the downside. Okay, and then same thing applies with bearish reversal. Let me just quickly see if I can't move this. There we go. Okay, so again, we are making our break of structure to the downside, following our trend. break of structure to the downside, break of structure to the downside, and then also keep in mind this would be in our higher time frame. Let's call this a 4-hour demand area. 4-hour demand area, excuse me. Tapping into our 4-hour demand area, reversing, showing us that this 4-hour demand area has some strength to it, and there's orders lying here. Remember, if we create an order block or an inefficient push over here, which causes our POI, that changes character to the upside. This will obviously show us that there are a lot of orders stacked over here, as they did have enough strength to actually break the highs, the strong highs over here. And then we have our inducement, which we always need. And I think we can go over some what inducement is and what liquidity is in a moment. And then we take our risk entries for buys to then target the market, to target some buys, and then for the market to continue to the upside. And let me just quickly run through some trade ideas that I did have for today. And let me just give me a second to just remove all these drawings over here, just so I can clear up the charts for you guys. So I think one thing that Jay and I want to emphasize as well is our higher time frame narrative, because I see a lot of the times, especially with my students, the higher time frame narrative isn't there most of the time, because you can't just take, like, if the market is moving to the upside on the 15-minute and all of a sudden breaks a low, and then now people are starting to target 15-minute supply areas over here, but there isn't no higher time frame narrative. Maybe there's the weak highs are still over here, and we actually want to target these weak highs, but then we are taking sells of this area. It wouldn't make sense. But yeah, just higher time frame narrative is essential. So a few of the trade ideas that I'm looking at for today is on USD CAD. If we start off on the daily quickly, just excuse all the writing, as this is obviously marking off all the smaller time frames as well. But if we can look over here, we had our daily break of structure over here. So let me just quickly draw this out for you guys as well, so to make it a bit clearer. So we had our daily break of structure over here, daily break of structure over here. Now we have our daily weak high over here and our strong low over here. Now what we want to see is, obviously, we want to see a pullback and then a break of structure to the upside again. Okay, so keeping this in mind, we can obviously see that we have had our pullback over here into a 4-hour. If we go down to the 4-hour, a 4-hour demand area that is over here. So now we have started making that push to the upside, which I still believe we still need to do. So what are we? So overall, I'm bullish bias on USD CAD. So going down to the 15-minute now, we have made a change of character. Nice break of structure to the downside. Nice break of structure to the downside, and another one over there. And now we have broken and closed above this high, leaving this unmitigated demand zone over here, which we will then look for buys, as we have had our inducement already, which can be seen by these rejections to the upside. Let me just quickly mark them out. These rejections to the upside over here. So this would definitely be one of the trades on the cards for today. And obviously, I did tell you guys, when you do take reversal trades, it has to be coming off of a higher time frame POI. Just going up to the 4-hour again, I do consider this candle over here. Draw it out for you guys. I do consider this candle here as a 4-hour POI, as it has created a FEG, or imbalance, or inefficient push over here. So that is probably the only trade that I will be looking at for today. I don't know, Jared, are you looking at anything for today?
For the last couple of weeks now, I've only been trading EU. EU's just been really clean. It's the market I've been following through the most. So I used to be primarily an XAU USD trader. My main watch list consists of EU, GU, and XAU, and then just a couple of other major pairs that I look at with my members on stream every morning. But that's ultimately what I want to get down to next with you guys, is having a look at one or two pairs that you guys would like to have a look at. But one thing I also want to say about what I want you to take from in the way that Hein trades, it's a very rule-based, system in terms of it must be a higher time frame POI, whether that's a daily or a 4-hour institutional level, in line with your daily structure, and he only trades when price mitigates that POI and prints that M15 confirm. It's those 3 strict rules, and he takes a mechanical 3 risk to reward. And that is what ultimately I want you guys to take away from the streams here, is how important it is to follow a set of rules and to execute only based on those rules. One person in chat says, Jay, my mic is very soft. You guys can hear me fine?
I think adding to that, Jay, is it's so important. I think I heard it from Photon actually, was, trading your plan, not trading your balance, because I feel a lot of the time our emotions do play with us when it comes to, I feel like our emotions really do play a part when it comes to the amount of money that we do trade. And I'm speaking in general about let's say a funding challenge, and we take trades based off how much we left, how much of the target we still have to achieve, how much we down. I think a lot of the time we just have to understand that we have a rule-based plan for a reason, so that we can trade our plan and not our equity balance.
Yeah, I'm just quickly checking. My mic seems fine. I can't see why people are saying it's soft. As long as you guys can hear me fine, that's okay. And then I'll just have a look off the stream why it's a little bit softer.
Jason in the chat, Han, how often does your trade plan play out correctly? So Jason, so with me only going down to the 15-minute, price doesn't play out in my favor a lot of the time, meaning I don't take a lot of trades. So I haven't taken a trade in about 3 weeks. I do feel that is a common problem when it comes to the higher time frames, because the 15-minute time frame is about a medium time frame. It's not as low as the 1 minute, 2 minute, and 5 minute. But I've got about 84% win rate when it comes to about back tested over about 100 trades, which is really good actually. But again, the downfall is sometimes you get 2 to 3 trades a week, sometimes you get no trades for the month. But the win rate's high, and I also only use a fixed 1 to 3. Which helps with that win rate as well.
Yeah, so you got to keep in mind, the higher your risk to reward, for example, high in trades 1 to 3s, the higher that is, the lower your win rate is going to be, because that ultimately means the tighter your stop loss is going to be, and the longer your trades are also going to be. So for example, my backtesting data, I have about a 35-40% win rate. But remember, I'm targeting anywhere between 10 and 50 hour trades. So I'm going for a really, really refined, tight stop loss on the real lower time frames. That's just because that's the way I prefer to trade. But I don't mind taking 3 or 4 losses in a row, because those losses are absolutely tiny and not even relevant to how big the wins are. So that's where you can afford a 20-30% win rate, and that's just the style of trading that I've determined that works for me best, again based on years of backtesting and data collection and really hard work at this and learning in how the algorithm of price moves. But yeah, I want you guys to comment down in chat if you guys want us to take a look at a pair or two with you and actually go over it from complete top down live, just to give you an understanding, well, maybe a bit of a better understanding from a chart that hasn't even been marked up yet.
I think before we go on to that, I do have another trade idea on USD JPY. I don't necessarily do. I think we're gonna get it today, as we do have. I think we have unemployment claims today at 3:30, Jay.
I haven't even looked at the news for today yet.
But regardless, USD JPY, we had our 15-minute change of character to the upside, and then we had another breaker structure. And so a lot of the times I have to, with only using the 15-minute, I have to differentiate between swing structure and internal breaker structure when it comes to, let's say, market moving into the upside and then doing something like that. Because obviously we have our 15-minute, let's say our 15-minute high over here, our week high over here, and then we have our 15-minute strong low over here. And this is where I just want you guys to see again that we have to understand our basics, and going back to when we started our trading, our high lows and our high lows, lower highs, lower lows, higher lows. We have to understand them, because at the end of the day, is when you trade a mechanical strategy like Jay and I do, understanding where your highs and your lows are is important. And if you do miss and get that wrong, then your whole bias and trade plan could be wrong. So that's just one thing that we have to just understand. Coming back to you, Jay, just very simple, break of structure to the upside. We have our nice order block over here. One thing I do also trade is I only trade order blocks. So that's just one thing to keep in mind when looking at my POIs on stream. And then, we have some inducement over here. I would like to see some more form, and then we can take some entries on this pair. Otherwise, that is all for the day for me.
Yeah, that's absolutely beautiful markup, and I like again how rule-based it is and how mechanical it is. But yeah, one person in the chat said here, Lloyd, GU. We can have a look at GU. So what I'm going to do is I've already marked up GU for my members quite a while back. So I'm actually just going to remove all of the drawings. Let me quickly come back to my screen. There we go. Okay, you guys should be able to see on my screen. So we can actually start from scratch from GU. So I'm going to go all the way from the monthly to the M15 so that you have clear context and understanding of what price is doing and why price is doing what it's doing on their relative timeframes. Okay, so most recently on GBP USD, we have created a monthly swing break to the downside with a candle body closure. Every single break of structure needs to be confirmed with a candle body close. Monthly break, monthly strong highs, monthly weak lows. So already, just looking at the monthly, the expectation of order flow is to create, I think those are record lows, yeah? Record lows at about 1.032 or 31. Eventually, that's now speculation within the next, at least, I would say, 2 to 5 years. Can we also do XAUSD, please? Yep, sure thing. I'll cover XAU after GU. All right, so immediately looking at the monthly, we've had our price mitigate the premium of this entire range. We have potential monthly POI sitting over here, monthly supply range. So yeah, these are areas where we can start to then confirm those internal timeframes to look to start continue targeting these week lows. As this is just the expectation. This, I don't really focus too much on the monthly and the weekly. I just use it to get an understanding and a more clear understanding on where the daily is, why the 4 hour is doing what it is, and ultimately all the way down to the M15. Okay, so again, from the monthly to the weekly, we've now had a monthly swing break, mitigation into the premium of this entire monthly swing range. After that mitigation, we then created a weekly swing break to the downside. Okay, which is now the internal of the monthly, which is our weekly, has confirmed that there's good probability for the overall monthly structure to follow through again within the next couple of years. Okay, so immediately looking at price, just on the monthly and weekly alone, we've just had our weekly break of structure. We've just had our, internal weekly break, signaling the start of that weekly pullback. Okay, this will most likely be the daily pullback, mitigation of demand to continue targeting those daily weak highs, ultimately understanding that all of that is catering for the weekly pullback. So immediately, without even looking at the 4 hour and the lower timeframes, we know that there is room for price to continue more bullish, just into at least the premium of this entire bearish weekly swing range, which could be into areas of supply here, areas into supply up here. Okay, just potential POIs where we can start to expect the internal order flow to start shifting bearish to target those weak lows and ultimately follow through the overall monthly structure. Okay, so now that we have our weekly marked out, we can hop onto the daily. Okay, most recent. daily break to the upside, previous daily break to the upside, daily pullback into demand to continue targeting those weak highs, new strong lows, let's just mark that out more formally, and our daily weak highs. So immediately looking at the daily, understanding that this daily is currently bullish because it's just catering for a bit of a weekly pullback, which we can expect to start shifting once we potentially mitigate the premium of this entire weekly swing range. Okay, and then understanding this weekly bearish shift has catered for the end of the monthly pullback. Okay, so you're slowly but surely starting to see why the daily is doing what it's doing, why the weekly is doing what it's doing, and also why the monthly is doing what it's doing by looking at the yearly. But we don't need to really worry about that far back. That's just ultimately, the further you go, the more understanding you're going to have on price. I have a question. If price turns 2 pips around in front of a higher time frame POI, but gives confirm on a lower time frame, would you guys take that trade? No. Price must mitigate the higher time frame POI. Anything that reacts or pulls back just below it acts as liquidity for that zone. Are you guys going to be streaming every day? Yeah, this will be a daily live stream series here on my YouTube channel for everybody to watch freely. Okay, so continuing with the daily, immediately interesting areas of POIs over here, which we can mark out for now. Now remember, we don't have to immediately think now and try and predict price to go long from here. We can react to price as it starts to pull back to these areas. If our lower time frames give confirms with our internal shifts to the upside, we can then look to start going long, because it's not to say that these strong lows are going to hold. If this continues bearish, takes out these lows, then that's confirmation that we can target these weekly weak lows, following through with the overall weekly order flow. Okay, so that's again, every single POI. Why is this giant pen here?
Your drawing skills are immaculate.
There we go. Thank you. Now I've lost. Okay, let me just quickly remark this out. Daily break. Daily strong low. Daily weak high. Okay. So hopping onto the 4 hour. Also, in this scenario, our 4 hour swing is also our daily swing structure. So what we can start to see over here, this internal M15 right here, right now, is bearish just because we are due for a bit of a daily and a 4 hour pullback. Okay, so immediately I can see on the 4 hour, we've had our 4 hour breaks, 4 hour bars, there we go, 4 hour weak highs, and our 4 hour strong lows. So the expectation on the 4 hour is to respect and protect those 4 hour strong lows and to eventually start targeting these weak highs. Okay? Understanding that this is still catering for that weekly pullback, which we want to see mitigate at least the premium of this entire weekly swing range. Okay, so valid 4 hour POIs, just to where we can start to expect the end of the pullback to start targeting those weak highs. We have a valid demand fractal range here, and we also have a valid more recent zone right here. So these are areas in the discount of this entire swing range. There's nothing really interesting here in the premium, but ideally we want price to mitigate the discount of this range. And as soon as we enter discount, we can start to expect this pullback to start ending to eventually then target those expectational weak highs. Okay, so from the 4 hour, well, from the monthly, we've gone to the weekly, to the daily, to now understanding the 4 hour, which we confirm the 4 hour with our M15, the M15 being the 4 hour internal. When waiting for a displacement on the 1 minute time frame, how big would you say the displacement needs to be? As long as it creates a significant and visible fair value gap within, for example, these 3 candles here, 1, 2, 3, it's created a significant fair value gap. Okay, for example, pullback into the discount of this range, significant displacement sweep where we can look for entries with inside of there. Just a silly example of what a visible displacement fair value gap would look like. Okay. On EU, is that a valid M15 boss? I will hop on EU now. Just quickly want to finish GU. Okay. So GU at the moment just really reacting off of all the supplies, catering for those 4-hour pullbacks. And again, that's where it comes down to, is instead of looking for cells of clear supply areas that you see way back from the past, it's important to take note and understand what structure and order flow is printing for you most recently. Okay, because understanding our order flow at the moment is bullish, weak highs, expectational order flows to target those weak highs. So these older supply areas are just really going to be areas where we can anticipate the start of these swing pullbacks. Okay, so onto the M15. As we mitigated this, why is this not showing on the M15? Let me just quickly make this visible. There we go. Okay, as we mitigated this higher time frame supply zone, we can start to expect the internal to start shifting bearish, because understanding we are due for a bit of a pullback phase after that previous 4-hour swing break to the upside. So again, GU very similar to EU. All right, we had mitigation, pullback, didn't take out the previous lows. Weak highs, targeted, pullback, weak highs, targeted, new strong low, broke to the downside. So this was our valid M15, internal break to the downside. Okay. We have valid areas of, well, supply here. We have valid areas of supply up here. And those are only real 2 M15 POIs, again, that you need to apply those 4 criteria. It needs to have the liquidity buildup, inefficient push, must create the break of structure, and must be unmitigated. So for example, this POI over here created the inefficient push, the break of structure, had pretty much relative equal high liquidity sitting below it. Also, after this mitigation, well, just below, that was the refined candle. Just below the zone, we had more liquidity form. So therefore, this was a valid for our M15 institutional level with our 4 valid criteria. Okay, valid to then look for your 1-minute entry confirmation models to go short, understanding that we're riding the 4-hour pullback. We internal pro trend because that pro trend is now catering for that 4-hour pullback. Understanding that the overall 4-hour swing structure is, and the daily swing structure is catering for a bit of a weekly pullback. Okay, so this is where, again, hopping onto the lower time frames, it's so important to have that clear context all the way down from the higher time frames, which will really start to allow you to get those high risk to reward trades and ultimately manage your risk best. Okay, so yeah, as we follow through price now this morning, we've created new internal breaks to the downside, internal pullbacks into supply areas, maybe not necessarily the extreme, new internal breaks to the downside, pullback started, new weak lows targeted. Okay, that pullback is now started after these fractal breaks to the upside. So that then signals this is the new internal weak low. And our previous M15 strong high. Okay, now a much more mechanical way to approach this is how to identify your strong highs is the highest point after the pullback that's created the next break of structure. Okay, so previous break, pullback, new weak lows targeted. Where was the highest point in the swing range that created that next break of structure? Well, this high here. So therefore that becomes your rule-based strong high. Okay, so immediately looking at price this morning, we had quite a nice Asia liquidity model play out. We want to see price pull back into potentially areas of supply here. And we also have extreme areas of supply up here. Okay, so understanding the M15, which is our 4-hour internal, is just currently bearish, catering for that 4-hour pullback phase. So until those strong highs go to the upside, that will then potentially be confirmation for demand to be in control, to then look for longs to target those overall 4-hour week highs and the overall internal M15 week highs. Okay, so yeah, my favorite type of liquidity for a 15-minute institutional level is the Asian highs or the Asian lows. So what I like to look for in the M15 swing ranges is any supply or demand zone that holds the Asian highs or the Asian lows. So for example, we have a valid supply zone over here, which in this scenario, because the wicks of the candle is bigger than the body, mitigation is only valid at the 50%. Therefore, we call this an equilibrium zone. So ideally, what I would like to see, and this is a potential trade plan I'll be looking at on GBP, USD, is sweep of that Asian highs, our 1-minute entry model to then go short to target those weak lows, to ultimately try and refine as best as possible. And this is where my system is a little bit different to Heinz, where I like to refine all the way to the 1 minute to get that really tight stop loss to target those weak lows. Okay. So yeah, what I would like to see as price approaches this area of interest, again, is on the 1 minute time frame. All I want to see is ideally, where's that path tool? Sweep of Asia, that initial reaction, whether that's a displacement fair value gap, a sweep of that high, then the true displacement fair value gap to go short. Okay. Ideally, if price mitigates, kind of formulates and accumulates a range to sweep that high, to then create the displacement fair value gap, to pull back to enter confirm to go short. This again is what we call accumulation, manipulation, confirmation of the distribution. Okay. So are you guys happy with the breakdown on GU? Understanding that shorts is M15 pro trend, but 4-hour counter trend. Understanding that we're just trading the 4-hour pullback phase. Okay. Every market controlled by buyers and sellers will follow supply and demand. Yeah, 100% true. Well, there's a lot of, I know ICT himself talks quite down on supply and demand. It's just because, remember, every trader is trained to see the markets differently. His perspective in how the algorithm of price works is through liquidity sweeps, his structure model, and fair value gaps. Now, ultimately, the way that I see price playing out, and I've seen this back all the way, if you go all the way back to, I think, the 90s or the early 2000s on the charts, price respects and follows through the algorithm of structure, supply, and demand. And then you can start to incorporate your lower time frame, well, where I've used some of ICT's concepts, liquidity sweeps, your fair value gap entry, but in line with the higher time frame intentions and ultimately the expectation of order flow. Okay, but the person who asked down for the breakdown of GU, are all of you guys happy with GU? Does this work on BTC? Well, any market that has buyers and sellers will follow institutional structure and order flow via supply and demand. So you'll probably find if I created a company that was selling coffee mugs and I launched a tradable chart on TradingView or MT4 that you can trade that company, that structure and order flow of that company's price will follow through via supply and demand and structural concepts. Awesome stuff. Jay, Hein, do you swing trade? Only swing trade, or do you only swing your trades, or do you only trade London, New York session? I am predominantly a London session trader, and I'm a intraday trader. So I will hold trades for no longer than a day.
Yeah, no, definitely. I'm the same as well. I definitely don't hold overnight, and I trade predominantly London and New York session.
If we were to look at Euro USD, it swept the Asian high, then took out the high that swept and caused the change of character. Okay, let's quickly have a look at EU. Yeah, so for me, internal is still currently bearish. We've just swept those Asian highs. So what I would like to see is ultimately, well, at least Let me just move this 4-hour POI a little bit back. Okay, what I wanted to see was mitigation into this higher time frame POI, but we have also swept the Asian liquidity. The area of interest that I would mark out is also this supply. We're now busy forming inducement here. So what I would like to see on the 1 minute is ultimately a mitigation of that POI. Then for my displacement fair value gap after the sweep of this liquidity as well. Simply because we had that, well, displacement market structure shift fair value gap here. It's because it didn't mitigate the POI yet. So that actually comes down to the other person's question now of, will you take an entry if the 1 minute gives a confirm but it hasn't mitigated the POI? No, because it's not within my rules. My rules is the displacement fair value gap and accumulation distribution model needs to happen in the higher time frame POIs. Okay. So yeah, again, if price continues from here without tapping my area of interest, I will let it play out. If we target those weak lows, we'll have a new strong high, then look to formulate a new trade plan later on. But as price is now, it hasn't followed through with the trade plan, could potentially still do, but I will react to what my entry model does as we get to these POIs. And again, that's where it's so important to rather follow that trade plan than looking to force yourself to get involved. Okay. Another person asked for XAU USD. Hein, do you want to mark out gold?
Yeah, I wouldn't mind.
Okay, I'll let Hein take over XAU USD. I will also do it on my side as well, and then I'll give you guys some of my input as well. But let me just switch to Hein's screen. Just quickly setting that up. Why is it not showing now on show on stream? Oh yeah, it's because you hopped off now. Just quickly adding it back. Okay, there we go. Just quickly switching that. Okay, the audience should be able to see your screen now. Yeah, I can see it on the stream.
Okay, cool. Let's start on the daily. Let me just quickly check. I just checked the stream went black there for a second. Okay, cool. Let's just quickly start on the daily. Okay, so let's quickly start over here in the start of 2023, just to make it a bit simpler for you guys. Okay, so first, right off the bat, we had our first break of structure, so we can name that our daily break of structure. And then we have our break of structure to the upside again. So here we can see that it did close just above, so we can actually call that our next daily break structure. Let me just quickly mark that for you guys. Okay, and then straight after that, we broke this low. As you can see, we had our pullback, broke it over here. So now we had our daily change of character. Okay, that in for you guys there. Okay, we can see that we had another break structure to the downside over here. And then yet again, supply is in control and had our another break of structure to the downside over here. Okay. All right. Now, after we had this break of structure, we had our strong high over here, which was then broken and then closed above, which means this is now our daily change of character. Let me just quickly mark that up for you guys here.
If you quickly take a look at the weekly on gold, that daily has now shifted bullish to cater for the overall weekly swing, which is the expectation to target those weak highs. Weekly break, weekly strong low, and weekly weak high. The daily being the internal of the weekly.
Week. We'll go weekly.
Yeah. So again, just to quickly, I won't interrupt again, but if you want to get a bit more context on the daily, you can use the weekly, which will give you an understanding on why the daily is doing what it's doing.
Weekly is week. Yeah, cool. Yeah, so as Jared says, we had our weekly break structure at the same place over here. And then let me just quickly mark that out for you guys, for some of you guys can see. So we had our daily break structure, which also was our weekly break structure. Then we have our weekly demand area over here. And then obviously the daily is just confirming us reacting off of this weekly zone. Okay, going back to the daily. Right. As we can see, we have our weekly strong low and our weekly weak high. And we just had our daily change of character, which we will then look to target a POI area on the daily for buys to then continue targeting those weak highs on the weekly. So coming back to the daily, we just had our change of character. So what do we look for now? Just like we explained earlier, we had our break of structure to the downside. We have just broken our high. Now we are looking for potential buy opportunities of our demand areas to continue to the upside. So let's just quickly mark out a few POIs that had inefficient pushes. So here we have one over here and another one over here. And I think, yeah, we have another one over here. So now we've got 3 POIs that we can potentially reverse off. Obviously, we can see here that we have tapped into this one now. And then if we go down to the 4-hour and just quickly mark out a few things over here. Right, so we had our 4-hour break of structure to the upside over here. Then we had our change of character to the downside. Obviously, this confirms this change of character to the downside confirms that we have just made a new high on the daily. Then we are looking for our pullback to the upside. At the end of the day, remember, we don't always have to tap into a POI area for that pullback to start. So on the daily, going back to the daily, sorry, we did, however, pull back into this POI over here, this supply area that has now initiated the pullback to start of the daily, so then we can start looking for something like this to happen off a POI. Right. Going back to the 4-hour, this change of character, this 4-hour change of character has now confirmed the start to the pullback. Now, tapping into this daily POI over here, we have now seen a break of structure to the downside over there as well. Let me just quickly mark that out. Break structure, the upside to the downside, excuse me, and now we have broken this high. So this was our strong high that caused this break of structure, but we have now broken and closed above it. This would be our 4-hour change of character. As you guys can see at the top-down analysis, you can kind of piece it together and see how it all comes together. Yeah, so just saying again, as we do our top-down analysis, you can kind of see how everything is very easy to mark out. It's very simple and it's very mechanical. But anyway, coming back to our 4-hour change of character now, what this could be is the 4-hour confirming the end of the daily pullback, even though it has not come into premium, which Jared has spoken about. If I can just quickly mark it out, the premium would be about this area over here. And let me just quickly darken this for you guys a bit. That would be our premium zone, even though it has not tapped into our premium yet, or our discount, sorry, not premium, in our discount area. We can still see this market shift to the upside and break these daily week highs. This would be our daily week high. Excuse me. Okay, so coming back to the 4-hour, we have had our change of character to the upside now, which could confirm the end of the daily pullback. So what we can now potentially see on the 4-hour is we can see the market forming bullish trend. So what we can now look for is what we were looking for on the 4-hour is another POI where we can potentially look for entries. Here we would have another entry zone over here. And then I would actually consider this an area of interest as well that we could look for the market to tap into. So what we would then potentially be looking for is the market to tap into this area, and then we would go down to the lower time frames and we would look for our entry model. Okay, going down to the 15-minute. Let me just quickly do here. As we can see, we had our 15-minute break of structure to the upside over here. Okay. And then we had we broke this higher low. This would be our 15-minute change of character. Now, what we are left with over here is we are left with a strong high, our 15-minute strong high. Excuse my typing. And then we would have our 15-minute week low, right? So now, what do we do if we are counter trend on the lower time frame, but we are actually looking for bullish bias on the higher time frame? So let me just quickly check here, weekly low, sorry. So we have not reached a POI on the 4-hour yet, meaning we have not tapped into any 4-hour POI. So what we could potentially be looking at is sells into these POI. So what we could then be seeing on the 15-minute is we can potentially take trades off of the supply areas, let's say such as this one, and then continue to the downside, breaking our week low, targeting our week low, breaking structure to the downside, tapping into our POIs, our higher time frame POIs, and then potentially looking for reversal trades such as this. I'm going to hand back over to Jared, as I think he's marked up for you as well, but this would be potentially what I would be looking for on gold.
Let me quickly switch back to my screen for you guys. There we go. Okay, should be able to see my screen. Yeah, so very similarly to what Hein had on the weekly, most recent weekly strong lows, weekly week highs that were previously targeted. Start of that weekly pullback after the daily shifted bearish. These daily strong lows went to the downside, which then confirms that the weekly pullback is going to start, leaving behind our weekly week high. So this only becomes a weekly week high after the internal has shifted bearish. Okay, so really since the beginning of May all the way to now, the end of September, we pull back on the daily to the more extreme institutional levels of the weekly on gold, for then the daily to now shift bullish, which is then good confirmation and probability that will most likely follow through with the overall weekly order flow from here. But remember, price is not just going to now suddenly go and target those weekly week highs. It will follow it through its rules of structural order flow, which again, we can confirm and react to on the lower time frames. So from the daily, if I have a look at the 4-hour, okay, previously we had the daily break of structure to the upside. So what can we anticipate after that daily break is the start of the daily pullback, which we confirm with the 4-hour. So again, I quickly want you guys to make note of that. From the monthly, we go to the weekly, because the weekly is the monthly internal. From the weekly, we go to the daily, which is the weekly internal. From the daily, we go to the 4-hour, which is your 4-hour is the daily internal. From the 4-hour, we go to the M15. The M15 being the 4-hour internal. Okay, so those are the mechanical timeframes that I use to get that overall contextual understanding of price. Then your M1 and M5 is just for confirms. Okay, we don't look at structure or order flow on the M1 and M5 because it's a very aggressive way of approaching price, and it's going to add a lot of noise to your structure story of what price is printing. So that's why we just use the M1 and the M5. Okay, so just keep that in mind for now. So immediately after the daily break of structure, we can start to anticipate that 4-hour to start shifting bearish, to start catering for a bit of a daily pullback, whether that's into the discount of this range or more extreme institutional levels, for then the 4-hour to start shifting bullish to target those weak highs and ultimately follow through with that order flow. All right, new daily break, 4-hour pullback to follow through the overall weekly expectation. Okay, so immediately after the daily break, we've now had that 4-hour strong low, took out the previous week high. 4-hour pullback started after the M15 swing broke to the downside. 4-hour supply mitigated and really continued to target those weak lows. Pullback, target the weak low until we broke the 4-hour structure to the downside, which now confirms we're in that daily pullback phase. Okay, so we can then mark out areas of demand, whether that's here or here, just to anticipate when we can potentially start that 4-hour pullback. Because remember, after a 4-hour break, we're due for a bit of a 4-hour pullback, whether that's into the discount or supply areas, to start shifting bearish and continue with the overall 4-hour order flow, understanding that all of this is just catering for the daily pullback. Okay. So yeah, most recently on the 4-hour, we've now mitigated 4-hour areas of demand, understanding we can anticipate the start of the pullback from here. So we confirm the start of that 4-hour pullback by reacting to the M15. Most recent M15 strong high, M15 weak low, mitigation of this 4-hour POI. Okay, we had that M15 internal break to the downside, because remember, within M15 structure, here's our M15 high, M15 low, we still have internal structure that caters within here. And we confirm the start of M15 pullbacks with M15 internal structure. All right, so most recent high took out the previous low, strong high, broke to the upside. That then confirms that this becomes the weak low, which we then broke structure to the downside. We targeted that weak low, making this a new strong high. Price then continued, targeted that strong high, making this an M15 strong low. Okay, and that pullback for me only started, well, over here. We just really had a range. We didn't take out any previous internal lows. So therefore, this was not a valid pullback. It was more just a pause in price action. Continued bullish. Took out the overall M15 swing high. Also, a bit of a pause in price action. We didn't take out any previous internal lows to confirm the pullback. Targeted these internal weak highs, creating a new internal weak low. Broke that internal to the downside, confirming the start of the overall M15 swing pullback. And also, now that the M15 has shifted bullish, this confirms the start of the overall 4-hour pullback, which we can expect to potentially mitigate more extreme areas of supply, before then confirming that M15 to shift bearish to follow through the overall 4-hour order flow. Okay. So what I was looking for this morning, we had mitigation of a area of interest yesterday at about 3:30. Reaction, we then targeted that weak high. So we created that internal break to the upside. So the internal has now shifted bullish in alignment with the M15 swing to potentially target these weak highs. Okay. So most recent internal break, lowest point after that break of structure, which we can call our internal strong. Slight bit of a fractal pullback, which we can mark this out as the internal weak high. Okay, so the expectation of gold is to ultimately continue targeting these weak highs to cater for a bit of that 4-hour pullback. But this is where you also have to keep in mind, as we start to mitigate the premium of this entire 4-hour swing range, our 4-hour strong high, 4-hour weak low, we've now busy mitigating the premium. We can start to anticipate that M15 to start shifting bearish. Because remember, we're still due for a bit more of a daily pullback into at least the discount of the daily swing range. So therefore, because the M15 is now confirmed bullish off the M15 swing demand areas, we had mitigation into this valid demand with the inefficient push, break of structure, double bottom liquidity. Mitigation, internal is now shifted bullish. So therefore, these areas of interest here, if I get a valid sweep of liquidity with my AMD model, I will look to continue with interim longs to potentially target those weak highs, just riding more of the 4-hour pullback. Okay, I'm 100% happy also to, if price continues bearish, break structure to the downside, these supply areas will now be in control here and here, valid to then potentially look for shorts, which would be M15 pro trend and also 4-hour pro trend, understanding you riding that daily pullback. Okay, so that would be trade plan 2. Trade plan 1 is to really potentially continue with continuation longs to look to target those weak highs. Okay, so again, I don't need to worry about predicting that. As price pulls back to my POIs, I will wait for my confirm. If that plays out, I will execute. If that trade plan doesn't play out, risk management will always have my back. Okay, so that would be ultimately my 2 trade plans on XAU, just based on what price is printed this morning. Alrighty, you guys happy with XAU USD? Any questions? Do you guys have any questions on any of the pairs that I've covered? Anything that I've spoken about and anything that Hein's spoken about in today's stream? Because ultimately, what I want from these streams for you guys is to see what it's like having that consistency, going into session every single morning, applying that trade plan, applying your top down, and executing based on that trade plan. That's why I want these streams to be a daily thing for you, because it's so important that you see that consistency and it kind of becomes like a muscle memory game. Trading is much like learning how to speak a new language. And that's, again, comes down to where if you're in that mindset where you want to rely on signals, copy traders, other people's trades, that never leads to success in this industry. Because let's say I'm on a win streak of about 10 trades in a row. Okay, I've sent out 10 beautiful signals, all winners, and you suddenly now decide to take the 11th signal that I take. And you've seen I've had 10 wins in a row, but you overport and over leverage quite a bit of your account on that 11th trade, and that one's suddenly a loss. So while I'm maybe 10% up on the account, you're 3% down. And that's where the discrepancy in the results and the data of signals will never ever be the same. And that's why it's impossible to rely on signals. And rather why Hein and I have decided to start these streams to ultimately help you become independent at this yourself.
Yeah, Jay, I think it's important, it's that old saying, and I think people use it every single day, is you can take a horse to the water, but you can't make it drink. And, or better yet, actually, you give a man a fish, he eats for a day. You teach a man to fish, he eats forever. So I think it's just great when because I think, when we all start out, we're always looking for the easy way out, taking other people's trades. So
and that's the biggest killer in this industry, is people want it quick. They don't understand how much of a journey it is to actually make it in this industry long term. Yes, you may have one or two beautiful signals that work in the interim, but ultimately, if you want that lifestyle out of trading, to be independent and have that free lifestyle yourself, you have to learn the skill yourself, which is something that, look, has taken me close to 7 years, and I'm still learning tons of things as I go along. Hein as well, he's been at this for years. So everything that we're talking about here is not just kind of slapped together in a course. It's years of experience, research, effort, nights where we couldn't eat and sleep, put together in a mechanical methodology, you could call it.
Definitely.
Thanks, Jay. That was great. Top session, guys. Thanks. Appreciate this so much. You're welcome. And I hope to see you guys again in the future streams. Do you guys have any further questions on the chart markup that we've had? Any specific topics that you guys are struggling with? I know a lot of the guys that are probably not inside of my community or Hein's community that are new here today. I know a lot of the concepts that we've spoken about could have been quite foreign to you. But again, that's why I recommend watch the free content here on my YouTube channel. There's an entire free bootcamp. Then you're welcome to message Hein or I on Instagram. We're most active there regarding any questions on the content. And ultimately, that's how I want you to find your edge yourself, because once you watch the content, you'll have a much better understanding of what I'm talking about here in the streams. And this is really just for the people that are really new to the streams today and have never watched these types of concepts before. EU, fake chart. Let's quickly have a look at EU. So EU has now swept those Asian highs, which is ultimately what I wanted to see. But what I wanted to see to really execute this trade plan was mitigation of this POI. Again, simply because it's just really reacting off of this fair value gap. Remember, fair value gaps in my system is only on the lower time frame execution. I don't look at fair value gaps as higher time frame POIs. So yes, it has printed the potential accumulation, sweep of that high, displacement fair value gap, but it hasn't happened in the higher time frame POI. So for me, This is liquidity for this POI. I will rather let price play out. I don't need to force a trade out of this. I'd like to see the sweep, then my entry confirmed to go short. Okay. As it's not within my trade plan. And again, it comes down to, well, if it's within your trade plan, if, for example, on the M15 time frame, your areas of interest is 15-minute fair value gaps, then as long as it's a part of your trade plan, you must execute. Because remember, the way I trade and the specific concepts of supply and demand that I've figured out for me is what works for me. And also many of my and Heinz members in our Discord communities. But it may not necessarily be what works for you. And again, that's where it comes down to. Trading is an industry where it's like learning a new language over again. It's taking all of the concepts that you've learned from various mentorships that you've taken, YouTube videos that you've watched, backtesting, putting together your own system, and that's ultimately how you find your edge. So yeah, again, I know I'm going a little bit way into depth on the topic there, but if a 15-minute fair value gap was your area of interest and it printed your confirm, then it would have been 100% valid execution. Loss or win, 100% valid execution because it was based on your trade plan and not a entry of just trying to force yourself into the market for the sake of profits. Okay, so at Lloyd McFarlane, it has printed like the entry confirm, but only for me, just not in my high time frame POI. How do we know how do we know when or what that pullback is going to start after the boss? So yeah, again, 4-hour time frame. Let me just quickly mark this out here. Okay, 4-hour structure, 4-hour strong high, weak lows being targeted. How we can anticipate the start of these pullbacks is once the M15, which is your 4-hour internal, starts to shift bullish. Then we can anticipate a bit of a pullback into at least areas of institutional levels, or at least the premium of this entire range, which then, once that M15 starts to shift bearish, that can be our confirm to then continue targeting these weak lows. Okay. So the 4-hour is confirmed by the M15. The daily is confirmed by the 4-hour, and the weekly is confirmed by the daily. Okay. So to really, if I had to put this in a, like all of the 4 time frames together, let me just quickly come down here. All right. Weekly structure. Within the weekly, we'll have, oh, that's a bit messy. We'll have daily structure within. Okay. Within that daily, we'll have 4-hour structure. Okay. Within that 4-hour structure, we then have our M15 tiny structure that occurs within there. And this is ultimately I teach a much more mechanical way of approaching structure and seeing it more clearly, as obviously now this looks quite messy. There's tons of videos about it on my YouTube channel. Go to the ICT 2024 bootcamp playlist on my channel. Then obviously there's the full methodology inside of the Discord server. But yeah, that's ultimately how you confirm, again, is those mechanical timeframes. So you confirm the start of the 4-hour pullback with the M15 swing. Okay, let's quickly here. Hundreds, that's what I thought. Cool, thanks a lot, same for me, nice. Will you enter today if you get a confirmation in POI? If EU pulls back to, let me quickly come back to the M15. If EU pulls back into this POI, I will look at entering. But also, one thing I want you guys to remember is I'm not doing these streams for the sake of live trading, for you guys to rely on our live trades. Because ultimately, again, that comes down to my whole discussion. That won't lead to success for you. Even if I take 10 winning trades in a row, I want you guys to ultimately become independent at this. And that is why these daily streams is going to become a daily thing, not just a once-off stream in a blue moon, because you need to see that consistency every single morning. So tomorrow morning stream will most likely update on price, follow through, and that's what we would like to do throughout all of the streams. Okay. You count wicks as a break of structure? No. A candle body closure is a break. So for example, over here, this internal break was confirmed with the candle body close. If it was just a wick, that's just a sweep, not a confirm of a boss. Okay. Do you guys have any other questions regarding the markup that Hein and I have both done today on our system that we trade? Will the streams get posted in the Discord? Yeah, the links will be posted there as well. It will be within all of the private content section, that side.
Yeah, I think, like we also have to speak about just what the future plans are for the streams. I mean, obviously we are trying to provide, guys with the value needed to actually, become profitable in this industry. But I mean, we're also going to do a few fun things as well, aren't we? We're going to do some incentives. We're going to do quite a few giveaways. I mean, between Jared and I, we're planning some nice giveaways to everyone in the stream. So it's not always just going to be, it's probably not the best thing to say, but sometimes it gets boring just looking at charts the whole time. So,
yeah,
as we do provide value as well, we are going to do some fun things as well, which will come in future streams as well.
Clive, so no more streams on the Discord. I will still continue with the streams as per usual with the private members, and then the SMC live stream show will also continue as per usual on YouTube. Okay. The streams on the Discord might just start a little bit earlier in the mornings. And then straight after that, we'll be hopping onto the SMC live stream on YouTube. Okay, so the streams won't change inside of the community as per usual. But yeah, as we were talking about now, future plans for the SMC live stream show, I actually was busy planning this morning, just before my power went out. I was actually going to do a giveaway for the stream today, but I couldn't make that video in time to post it before the stream. So I'm just going to move it over tomorrow, but I will post on my Instagram later today a giveaway to 2 lucky people that will win a $1,200 funded account with no daily drawdown, but a 10% max drawdown. And that will be given away to 2 lucky people. And then 1 person will win free lifetime access to both MM Funded and HVD FX. So yeah, and I'd like to do perhaps a giveaway in every single stream just to get you guys involved as well. Definitely in the future, after we get a bit of traction with the live stream show, I really want to get some guests on, ideally some big names around the world. Ultimately, again, to give you guys watching as much as value as possible into how other people trade, their journeys, how they perceive price, and ultimately learn as much as possible. Okay, so yeah, keep up to date on my Instagram. I'll post that video later this afternoon after the stream announcing how you guys can get involved with the giveaway for tomorrow morning stream. Okay, just by a show of hands, how many people here are not from MM Funded and also Heinz Discord? How many people are new here today? Sweet, thanks Jay. Hein, really excited for these streams. I'm glad, and I hope we can provide you as much as value as possible in these streams. At Lloyd, me, at Mila, me. So a lot of nice new people today. Yeah. First of all, guys, welcome to our streams and what we do here. So we basically been streaming daily with our Discord community for the last couple of months now. But I've decided to also include a lot of the guys that follow my YouTube channel into what we talk about in the Discord as well, and really give some good insight into understanding price action, the structural concepts of understanding order flow, and how you can potentially formulate your trade plans and ultimately lead to the bigger goal of becoming your own profitable trader. Okay, so yeah, welcome all of the new guys. Really happy to have you guys here. Again, sorry, Han, continue.
No, sorry, Jay. I think before we, as we do come to the close, I think before we start tomorrow's stream, I think we should add some background music. I think we should see if they can hear us. I think we should test it out, so that we can start tomorrow's stream with some background music. I think it always just gives a nice touch to the streams.
Give me a sec. I think I can quickly get that right. I'm just going to quickly shift to Hein's screen. Or I can actually just go to YouTube here on my screen. Doesn't matter. Let's just search for calm background. What do you guys recommend as background music? Selena Gomez.
I was thinking Afrikaans music, but I mean, you do you.
Okay, let's quickly search up some background music. Then we can actually add some background music in the streams as well. I'm thinking, what can we search here? Stream background music. Yeah, let's try this playlist. Okay, I'm just going to put it at the right volume.
Boshi says some Christmas carols. I like that.
Christmas carols.
Yeah, I like that.
All right, 1st of December, we can turn everything over to Christmas carols. Okay, how does that sound? I'm playing a song in the background on stream, guys. Does that sound better? Socky music, yes. Let's get some Kurt Darren. Work focused drum and bass. Hein, I don't know if you can hear the song.
Let me just quickly mute myself and hear the stream here. Then give me a sec.
Perfect. Okay, so the viewers can hear it. Okay, nice.
Yeah, I can hear it very softly, but I mean, it doesn't matter if I can hear it or not, as long as they hear it.
I've put it soft on purpose so that obviously it doesn't overpower our voice. But yeah,
of course.
Tomorrow's stream, I'll definitely add some epic music. Think you need more volume?
Yeah, that sounds perfect.
How's that? Better, guys?
Aiden ASMR trading. That sounds like a damn good idea.
I've never actually seen anybody do that.
I read we do like sound effects.
Yes, see. We should try it. Yeah. XAU buy sell signal.
I'll sit here with like a paper and then.
A bit too much? Okay, wait, maybe a little bit softer. Oh, there we go. I think that's fine.
Smooth like a baby's bottom.
Perfect. Sweet. Okay, then I think maybe for some of the new members that are here, we can actually... I'd actually prefer to announce the giveaway on Instagram first, and then rather do it in tomorrow's stream. It sounds like a coffee shop.
You know, touching base on a coffee shop, you know, Jay and I were thinking, we were chatting the other day about opening up a coffee shop for traders.
I actually created I still got it somewhere on my PC. I also love the idea of that. I created like my own brand of the coffee mugs, the coffee beans packets and everything.
I think a coffee shop for traders would be... Look, it's very niche, but I mean, I think it'll work.
Yeah, so every person that like walks into the coffee shop, you have to show us an MT4 account in order to enter.
Yeah, and it has to be real as well.
So that means guys like Darren Dix, Josh Naidu won't be allowed.
I would say only people, MT4, MT5 live accounts and people busy with their funded accounts. We don't want no demos.
How many of you guys are from South Africa? I can see a lot of the guys from MM Funded here, but to the new guys? Me? Hopefully my tab doesn't go in drawdown.
Yeah, Lloyd, it is quite a big niche, but I mean, at the end of the day, if we do something like that, it has to be one of those, we have to try it, because if you're not going to know if you don't try. Because I mean, we could incorporate like an internet cafe. Like I've always dreamed about opening a coffee shop with like pool tables, couches, TVs, computers, like a business coffee shop. But I mean, there are places like that though. Maybe opening it up to all business people.
Me, Port Elizabeth, Cape Town, SA, Cape Town, Nigeria, Zimbabwe, Eastern Cape, PE, the North one. Yeah, well, love from Port Elizabeth, from both Hein and I. We're all both from PE as well. So nice to see some locals here, and also other people from Morocco, Zimbabwe.
Morocco. Wow.
I'm sure you'll get customers that don't trade as well. Richards Bay, Ghana, Kenya. Oh, Hein, your cam disappeared again.
I don't know what's going on, bro. It's not from my side.
It's saying on my side that you're completely disconnected as a guest. P all the way? Yeah.
They are just joined it again.
Okay, let me quickly add you back. There we go. Okay. Yeah, so again, all I would really like to see on EU to potentially just continuing the ride of that 4-hour pullback. I'm still actually in an entry that I entered yesterday at about 6:15 in the evening. So I'm looking to really continue with the continuation from this. This is long at BE, especially after these breaks to the downside. This was a 0.3% risk. So same thing here. Going to keep it low risk for now until I really want to get that confirmation to start getting bullish, to look for that long runner to target those 4-hour weak highs. Okay. But yeah, so that's the only real viable trade plan that I'm seeing right now. It's just this area of interest in the M15 extreme, weak lows, valid liquidity building up for these areas of supply, and especially the Asian liquidity, which inside of MM Funded we teach as the MM Funded Asian liquidity model, which I've basically broken down for you guys in today's stream as well. Willis from the Americas must be sleeping.
That man's dosing hard.
Yeah, he's sleeping hard. How many trades do you take in a day? I would say on average between 2 and 5 a week. Last week, I only took one trade. So it all depends on when my trade plan plays out and if it's viable for execution. So there could be a whole week where my trade plan doesn't play out and there would be no trades. So I don't look at it as trying to trade at least once a day or twice a day. For me, that's not the right mindset to approach trading. It takes away a bit of your discipline. Rather look at it instead of, if my trade plan plays out, then execute. Don't worry about trading every single day. I mean, Hein, a good example. He hasn't had a trade plan for the last 3 weeks, but I think about a month or two ago, he's had his payout. He's still profitable because he remains disciplined. Hein's webcam.
Yeah, so just adding on to that.
Your webcam's gone again.
Gone again?
Yeah.
Still there to me.
I have the same trade plan on EU. More value from this one session than years of other free content. Yeah, well, again, it's very difficult to find the right information out there, especially on social media. And Hein and I actually had a discussion about this, I think it was the other day, or a while back, how social media creates a very big brainwash in this industry. Yes, people are posting their blue profits, they're showing the lifestyle, they have a course, or whatever it may be, but you don't know if that trader has actually backtested and worked on that system for years and years and let the data actually prove itself. And that's why you find a lot of these gurus that sell these courses, especially that post the Lambos, the lifestyles, they end up being really a bunch of crap in that course. It's because the lifestyle that they're showing isn't always true. And that's why a big reason we've decided to start these streams is because we hopefully want to reach out to those and help you get the right information and really understanding price, giving you a system to be able to backtest and really work out what works for you and find your edge in the market. Asian highs swept. Could we possibly see a Judas swing on EU? Yeah, so Asian highs have been swept again. Nicely in line with the M15 structure. Also understanding M15 is currently bearish due for that 4-hour pullback phase. So what I want to see is, ideally, our Asian liquidity model that we teach at MM Funded is the sweep of Asian into a higher time frame POI to then look for your 1-minute accumulation distribution model to go short to target those lows. However, we have had the sweep prices running beautifully, but again, it didn't tap my POI, so not a trade plan I'd be looking to enter unless it enters my higher time frame POI. Sorry, Hein, you can continue there.
No, I was actually just going to add on what you were saying there about, people in the industry. A lot of people, I think what people tend to find is there's a lot of different types of things that get put out on social media. Some people actually are really good traders, but they do market themselves differently. Like you've got people that are solid traders that don't market themselves, don't post their profits, don't post those types of things, their lifestyle. And people overlook them because they're not posting this lifestyle. But then you get people that post the blue profits, post the lifestyle, post all those types of things. But then at the end of the day, the only value that they provide is making other people think that, they are living this amazing lifestyle and then you can have it too. At the end of the day, you can have it. You can be a good trader. You can post the blue profits. You can have the Lambo. You can have the lifestyle. But not everything is, not everything's true. And what I found in this industry is 90% of the content that gets put out there is fake. Unfortunately.
Very true. And also one thing I want you guys to keep in mind with trading, also going away today, is most people want to start trading is because they see the Lambos, the mansions, and that's where they want to get to. But if you're a trader and you can pay for your rent and your food independently, whether that's your 1-bedroom apartment, that inspires me more than the guy that's just trying to flex his Lambos and his mansions, is simply because you're a good trader. If you're taking it on a small scale, you're able to afford your basic day-to-day needs, you're a profitable trader. So you don't always have to look at the, what people are posting on social media. Again, you don't need to compare yourself to that. This is a journey that you need to do for you. Trading is a very personal journey. It's one of the most emotional bullion games out there. So that's just one thing I want you to keep in mind as well, is when you see these massive $1 million profits posted on social media, most of the time it's not even true. You don't know if that system has been backtested. You don't know how much he's risked to make that. And those are all questions you've got to kind of ask yourself before even asking, is that true? So again, importantly, you don't try not to compare yourself to what you see on social media. And I've been through that. I saw the guys with the Lambos, the mansions, and the massive profits and thought, yo, I want to really get there one day. But as you slowly but surely go through the journey, you slowly but surely realize that a lot of those things that those people have been posting is not even true.
Look, at the end of the day, and there are some of them that do actually have those cars. But I mean, if you look at some of the gurus out here, especially in South Africa, you know, most of the money they make is actually from selling their mentorship and their signals. So you can easily, and it's become like a whole separate business or separate part of the industry where you flex a lifestyle that you don't really have, and you sell a course or a mentorship or a signals group, and then you make quite a bit of money off that mentorship or signal group every month. And then you can maybe, you know, go buy those supercars, because people are such good marketers. I mean, people, like the Forex industry's got two parts now. It's like you've got your people that are really genuine and really do make the money they say they do, and then you've got the people that make the money off their marketing, they are amazing marketers, but they don't know a thing about trading.
Yeah, and the thing is, that sensitive line in the middle has created such a difficult position for the guys that are truly there, that are actually there to give value in terms of their years of hard work and knowledge of what they know in the market. And it makes it very difficult for them to break through simply because of the image that the others have put on social media. That, you know, very like scammy kind of image, just flexing the cars, no real value. So it's very difficult to actually know who's real and who's not.
It's come to a point where if you post, like, and unfortunately this is what it's come to, it's if you post your profits on a daily basis, I don't believe you. Because, you know, that comes down to that thing, is like the things that you don't share is your income, your love life, and your next move. You don't share those things. So if you constantly showing me how much you're making, you know, it's just a principle that shouldn't be broken. You shouldn't be telling everyone what you're making. And you know, Jared and I have, sorry Jared, I know you're going to say something here.
No, that's cool.
I think we've spoken about it the other day, like even you post sometimes your payouts. At the end of the day, you're not posting majority of the money you make anyway. Like you can still show people that it's possible, because at the end of the day, if you don't show something, then people are going to think trading is a scam, but it's not. So it's a very touchy subject, because I mean, you kind of have to show people that it's possible, but then not brainwashing them with fake profits on a daily basis.
Yeah. So a big reason for why I do this, and also an inspiration from the guys that mainly mentored me, is I don't post anymore a single MT4 screenshot of the lot size or the profits that the trade made, is simply because, well, firstly, it's irrelevant and it sets a false expectation for others that want to start to trade. So yes, now and then, maybe once a month or so, I'll post a payout, but I will cover it in depth, and in terms of, I'll talk percentages. This was the 25% return on the 100k FTMO for the month, so it's realistic. It's not just a $20,000 screenshot. I'm explaining the percentage returns, the risk to reward that got there, so that keeps the audiences and the traders that want to become traders, their expectations realistic. And that's my biggest thing when it comes to social media. There is so many false expectations and false posting, which creates false hope for those that are trying to get into this industry. So that is why I only keep it to trading view analysis, my losses and wins, and you can have a look at my methodology, and you can work out for you that this will work for you when trading, without having to see my profits, without having to see my accounts. My members in that like know the account sizes I have, but I don't need to post what I'm making each and every single trade, because firstly it's false expectation for those that are wanting to get into this industry. And you'll find the big guys, my inspirations, MentFX, Photon, all they do is they just keep on all of their social media pages, it's just value. There's not one post of a car or flexing a house. It's just charts after charts after charts after hard work after hard work after hard work documented on their pages. And those are the guys I like to look for.
Yeah, man, massive respect for both of you guys, seeing where you came from and where you are going. Looking forward to what the future holds. Thanks, Jan. And I think with the stream, everyone's going to grow with us as we grow, because there's always more growing to do. You're never going to stop growing. So I think it's great to have a few people alongside with us that are going to walk this journey with us towards success. When will you make a video about risk management and trading psychology? I think we're going to cover a lot of those things in these streams as well, because both of those are very important things when it comes to our trading lives, both Jared and I. So I think we're definitely going to touch on that quite a bit on every stream.
Yeah, I actually have quite a good kind of like a mind graph to draw for you guys that will give you a good understanding of risk to reward, risk management in terms of percentages as a whole, perhaps for tomorrow morning stream as well, which I'll draw up tonight for you guys, and just kind of also show it to you in a more visual way to help you understand how risk to reward works and how to actually risk, for example, 1% of your account per trade and manage that risk as the trade goes along. So yeah, we'll create that topic around an entire future stream, perhaps tomorrow or Friday. No, tomorrow's Friday or Monday.
I think someone earlier said in the chat that they woke up thinking it's Wednesday. I think I did the exact same thing.
I just did now as well. I thought the day after tomorrow was Friday, but tomorrow's Friday.
Just out of interest sake, just a show of hands in the chat. Whose goal is to become a full-time trader? Like nothing else, just full-time trader.
Me. Well, I think most people that would be here taking the time and the effort out of their day to watch these streams, those are immediately the people that I can tell that have the first and best chance of making it. And I've actually said this to my members a few times. I can tell the viewers that are in the streams every single day, and I know those are the guys that are going to make it, because I can see you've got that drive and you're putting in the effort. And the thing is with trading, again, why we've started these streams is because in order for you to become that profitable and full-time trader that you want to become, you need to be able to learn the skill of trading independently rather than relying on others.
There's no going back. Already took the red pill. You and me both, brother. You and me both. Trader and developer.
Trader and developer. Is that software development?
Didn't you want to be a developer, Jay? Don't you still have a year to go on your degree that you dropped out of?
Yeah, so out of interest, just after school, I started BTech software at NMU. I dropped out of second year. I've still got a year left to finish my degree. And my dream was to become a doctor in software engineering back in school days already. And it's just amazing how life plays out and how you find different paths, and that's just where it takes you.
Jurgen, I wanted to become another stream of income for me. Perfect, like I always say, and Jurgen, we've actually spoken about it. Sorry, Jay.
No, it's cool.
Is trading is a great way for young people to build capital. A great way for young people to become financially free, and it's also a great way for people that are already financially established for another basket for their eggs. And it's always nice to manage your own assets as well, which is very good. Just before you go on there, Jay, I just want to clarify why I actually asked the question, because I'm actually sitting with the same thing now. Is I'm actually next year going to be doing my RE5 and wealth management degree. And that's honestly just to, grow in this industry. And trading is obviously a huge part of my life, and I do it full time. But I just feel like growing, you have to be able to, get out of the house, do other things as well. And like we've spoken about it as well, like sitting at home and trading all day with your members is fun as well. And I mean, it's a great career path. But I mean, trading, you don't want to be trading for the next 30, 40 years either, because it's such a stressful industry already. I mean, I think the whole plan is to build a lot of capital from trading to then, invest into other things, start businesses. I don't know how you feel about that.
Immediately, a person who wants to become a trader but has already created the foundation to trade, that being another stream of income, whether it's a basic job, whatever that may be, will automatically have a much better chance of making it. Because if you're going to start trading just, I don't know, to try and get out of a bad situation, but you've got no income foundation to stabilize your trading, there's going to be all sorts of stress, emotions involved when trading out of desperation to try and make money. And that's the first thing I also say to a lot of guys that bump into me and ask me about trading is, have you got that foundation? Because that will automatically help 10 times more.
Translates into you becoming a better trader quicker, because I mean, if you're trading and you don't have another stream of income, you are relying on your trading for your bread and butter, and immediately it becomes so much more stressful than trading already is. I see Carl James popped into the chat there. What's up, my brother? What is the RME5? RE5 is basically a financial diploma in, let's say, like selling insurance, selling retirement annuity, etc. Yeah, Jay is the doctor in trading. I agree.
Well, the way I approached my trading journey was like as if it was a 4 or 5 year degree. I knew that it's a long-term thing of putting in the hours. You won't believe the amount of signal groups I've been in, the amount of YouTube videos I've watched, the amount of mentorships I've taken to actually try and find the real good quality ones. Because the thing is, what I look for in the content I watch is does that person actually understand? Can I see that they've been on these charts for years and years and really understand kind of like the algorithm of price? So that's why, again, out of all the mentorships I've been through, there's really 3 respectable traders that I have for in this world, being MentorFX, who's one of my biggest inspirations, Photon, and ICT himself. And then Hein van der Venter.
Yeah, Jared Froneman was the biggest scammer I've ever met, but lately he's pulled up his socks, and now he's become the doctor of SMC.
But having a mentor is still the best. It definitely helps a lot, yes. The most difficult thing for most people is finding, firstly, the right information and the right mentor. There's many people out there that have a course that try to coach. But again, the best way to determine if that's going to work for you is take the concepts that you've learned there and apply that in a backtesting session. See if you can formulate something, and that will determine this mentorship is for me or it's not for me.
MF Funder is a scam and it made me profitable. Greatest scam I've ever heard of. Then, how can you balance a 9-to-5 job with trading? So this is very to do with your strategy, I believe. I've personally also had a 9-to-5 job while trading. It depends on what type of 9-to-5 job you have. Do you have like a very physical labor job, like construction? Are you out and about? Are you meeting people? Or are you sitting at a desk with a job? Sitting at a job with a desk with a computer in front of you? Because that obviously, it does make a difference. Because if you're out and about, it becomes a bit difficult. But I mean, having access to your computer or a laptop for, I would say, 30 minutes to an hour a day is actually enough, because depending on your strategy, but I mean, if you've got a strategy that's linked to, that you can look at the charts in the morning, know that what's going to happen, for what you're looking for that day, and then setting limits on TradingView, I think you can definitely balance it.
Yeah, again, quite a nice, I think, person that you can watch that talks very nicely about jobs is Gary Vee. And he often says, and it's a most common question he gets, I've got a 9 to 5 job. How can I incorporate that with my side hustles? Well, here specifically, that would be trading. And he says it's all determined based on what you do from 6 till 12 after that 9 till 5. And he says it's a lot of hard work, and that's what it takes. But you can already be lucky, and this will help you a lot with your trading, is that you have that 9 to 5 job and you have that foundation to get started with trading. But yes, again, it determines what you're going to be doing now after 5 o'clock. Are you going to watch Netflix, chill with the family? Or are you going to put in that extra time for backtesting, recapping the streams, recapping if you're a part of a mentorship, and ultimately putting in that hard work and effort? I mean, I think a very good example is Keegs Willis. He often joins my MM-funded streams. I'm streaming at 9:30 in the morning. He wakes up specifically at 3:30 in the mornings, every single morning, to join those morning streams. And then
That's
again,
determination.
it comes down to that drive. How badly do you want it?
Look, just adding on to what you said again there, Jay, trading's hard work and you're not going to get away from it.
Oh, 100%, yeah. I remember when I started, there was times where I couldn't eat or sleep because of trading. But that's just how the drive that I had in me as a person. And not only that, it's because I loved the process so much of learning this industry, and clicking specifically with trading. As a lot of guys that are perhaps on the stream today would know, or from my channel would know, that my channel has never really been about trading. It's always been about e-com, Shopify, short video, adverts, and all sorts of other affiliate marketing as well. And those are all the different things that I've tried. But what clicked for me at the end of the day, and where my profession and skill has really found its edge, is through trading. So you'll see, like, my channel now will be a lot of people that used to watch my content won't be here because they're not here for this type of content. But again, what I'm coming down to is, and this is something that Gary Vee likes to speak about a lot, is experimenting with so many different things to determine what is for you and what's not for you. And the same thing comes into trading specifically, is backtesting all of the different concepts that you've learned and kind of putting together your own system and learning what works for you and what doesn't work for you. Yeah, that's just my 5 cents input really on that. I was at first, but it's going to be very difficult to dump an existing profitable business to trade full time. Yeah, look, I understand what you mean. I had something very similar with my content creation business. I gave up a lot of that was very successful to move into trading full time. So again, that's just it can determine based on your strategy if you rather want to focus more on swing trading, which you're only trading really 2 to 3 times a month, but really holding long-term trades. Again, with swing trading, all that changes is your time frames. So an example would be, my style of trading is 15-minute POIs with the idea of 4-hour and daily intentions as an intraday trader with 1-minute confirms. Now, as a swing trader, that would shift to 4-hour POIs with 15-minute confirms, holding those trades for long term, not having to be on the charts as much, very similar to the way Hein trades. So yeah, that is something that could help you potentially in terms of trading while running a profitable business on the side, is just look at higher time frame trading, which involves less being on the charts and also trading less.
I think adding to what you said there for Stuart there, if you have a profitable business already, you have to prioritize that, and obviously you would know that. But I would say, kind of have a bit of a mindset shift on why you are trading, because at the end of the day, we trade to make money, and that's obviously the only thing we get into trading for is the money. And I think if you can have a mindset shift on why you're doing it, is instead of being like, okay, I'm going to trade to make a lot of money, or instead of I'm going to focus on my business and I'm going to grow my business, and then I'm going to use trading as a vehicle, as an investment where I can personally manage my assets or personally manage a lump sum of my money and then grow that. Because I mean, like any business, you'll have investments, you'll have retirement annuities, you'll have your life cover and whatever. And just like trading could just be another, like I said earlier, a basket for your eggs. So yeah, I definitely the mindset on what you have, what trading is for to you, would definitely be linked to how stressful it is, in my opinion.
Yeah, I 100% agree. And I think as you're running a profitable business already, there's always places to scale and go to that next level. And again, it comes down to that saying of hopping outside of your comfort zone to expand every time. I remember when you started trading with RSI and order blocks. Yeah. Oh, and those videos are still on YouTube. There was one video, I think it was the first or the second video I made. I used to use, I think it was double bottoms, double tops with, what was that indicator called?
Lux Algo.
Lux Algo? But there was another one. Fu Manchu. It was this.
Fu Manchu. I remember Fu Manchu.
Fu Manchu. Gives you buy-sell signals. So what I used to do was I used to look for, and guys, please don't do this, like literally like this, double bottoms, buy signal, and we buy. Okay. Although this was a good example, we ran all the way, but this is how I used to trade in the beginning. Let me quickly delete this atrocity from my chart. There we go. Yeah.
It looks like it works, huh?
Well, hey, backtest it. Do a backtest over a period of a year, and maybe it's something that you can figure out for yourself.
Maybe incorporate it to your entry confirms. Alright. Good question off the subject. Can unset mount platforms to close partials automatically or only...
Oh, MetaTrader platforms. You can. So if you hold onto your trade, click on modify, and the lot size value at the top, if it's a 1 lot size, change that to 0.5. And you can actually click close partials and it will close 50% of the trade. So if it's a 1 lot and you've set it to 0.3, then it's 30% of the trade. So that you can close partials on MT4. That is what retail traders use. Yes, retail traders is our liquidity here at MM Funded and the SMC Livestream. I think we
I remember
tried. Yeah.
I got to a point in my trading where I was so like, I didn't know what to do. Like I was losing every day, and this was about 3 years ago, where I would, for a week, I would just wake up, flip a coin, and then buy gold or sell gold.
Technically, if you're doing that, you should have a 50% win rate.
Well, it is. I mean, at the end of the day, if you think about it, the market can only go up or down. I always think about it like this. Like if you think about a roulette table, you've got your black and your red, and then the only thing that messes up your chance of it being 50-50 is that one green block. I would say that the market is the same. And don't get me wrong, I'm not saying the market is like gambling. I'm just saying like the market can only go up or down. So that's probably your black and your red. And then the only thing that differentiates that 50-50 is emotions. And then, like have you ever heard about the Fed wire, Jay?
I have not.
So essentially, like your big banks, like your JP Morgan and your, those big banks. So apparently they don't actually execute their trades. So basically all the orders are cleared by a external business, or not business. What do you call it? External, like an external company. So like Fedwire. I must actually send the guys on the chat the link to this. So it's a guy that talks about how time, and ICT talks about it a lot as well, how time reflects on the market. So when there's like a big buy, it's not necessarily all the banks being like, okay, we're gonna buy now. But coming back to what I was saying is, I think, like trading is a lot like roulette. It's either going up or down, but the thing that differentiates the 50-50 is emotion.
Yeah. This actually brings me to one thing that I want to try on streams within the next news event, and I actually tried this week, is I want to get 2 phase 1 challenges with Blue Guardian. And I'll do this on stream just to actually test. And theoretically, this should work, and it's worked before, is you full port just before news releases, sells on the one, buys on the other. One account closes, the other one passes, and you have a funded account. And theoretically, it should be kind of like a guaranteed way to get funded.
I think we start a series where we go from like a $5,000 account, we buy 2 of them, and then we scale up all the way to like a $300,000 account.
100% possible. Just through the power of compounding.
Of course, yeah. I once went through such a heavy string of losses, I decided to invert my trade decision. So if I wanted to sell, I would buy. I think we've all gone through that, actually.
Yeah, I think everybody's thought of that. But then the funny thing is, when you start doing the opposite, the original trades would have gone their way.
I think I've done that with a lot of signal providers, and when I started off trading, was literally I would see they would lose all the time, and I would just invert what they said, and then it actually worked out, but it's not sustainable.
Yeah. Boshi and I had the same idea. I once went through we just had that. Boshi and I had the same idea once. Yeah, it theoretically should work. We'll try it on stream and see what it does. The only thing I'm worried about is when news releases, let's say we're in a bit of a range, okay, that CPI releases, it has that big move up, and then that giant wick, and then the final move down. I'm just worried about one account getting stopped out on that has the shorts here, but then it gets stopped out. Then the other account that has longs goes into profit, but then also gets stopped out. Then like both accounts get stopped out. That's the only thing that could also happen. As if you look at CPI on, when was it? Here. So if you're buying here and you're full porting, this could stop you out first before going. So this move stops out the account that you're buying on. And then this move here stops out the account that you're selling on, so you kind of lose both accounts. So that theoretically
weird,
is also possible. But again, we'll try it out and see how it does.
I obviously showed you I took CPI on a private account, and the wick to the downside on CPI was too quick to stop me out. So I should have actually blown the account. So the wick to the bottom was too quick. So the broker never registered it.
We'll take them where we can get them.
Oh, that was I told Jared that's my monthly gamble. To avoid both being stopped out, you could put the sell in a close support and a buy. I would say you could do, instead of doing buy and sell, you could maybe just do, on the one you could do a sell stop, and on the other one you do buy stops.
Yeah, something like that. Roger Banks did that with CPI for fun. I gently moved the limits just before the news dropped, and it worked. Yeah, that's why I think limits will work a bit better, because you can kind of adjust it as price moves just before the news release.
I agree. Roger Banks.
It's on his YouTube page.
Do you ready we start being like all South African traders and being like, okay, trade NFP live, $200 for a signal?
Oh, yes, see. But yeah, personally for me, regarding news trading, I usually let news play out, let the structure and let price what it needs to do first, and then formulate a trade plan after news. So for example, this was a a prime example of actually core PPI yesterday was I let the core PPI news, well, the initial entry I took, I actually forgot there was PPI and then just got stopped out. Then I let core PPI play out. It created the structure shift, confirming the start of that 4-hour pullback, marked out my, over here on the 1 minute, well, I just really looked for, was this supply, and also then on the 1 minute, I like this volume imbalance gap that price fulfilled in the discount of this range. The only reason I didn't take this one because it was still in the premium. Then yeah, after core PPI played out, executed and let it run from there, really reacting to what price does often in the news. Because remember, when you're trading news, there's also aspects such as slippage, spread drastically increasing, and your losses can be way more than what you anticipated in terms of your how much percentage that you risked on that trade. Why do indice traders always put so many positions? Again, it's 90% of the time just for the sake to look extremely profitable on social media. Long term, that is not a sustainable way of trading. SA traders don't use stop loss. SA traders is like a different breed. It's kind of the mindset of we become rich or we don't, we blow it.
I was about to say, I think SA traders should become like their own niche, bro.
Yes.
I think they have become their own niche. Like, there's no one else like SA trade.
I see a lot of guys on Insta always open like 20 trades with the same idea. Again, I think a very good example is, I'll touch on this briefly, is Joash Naidu. How he spams those 10 lot sizes. And it's just not realistic. The profits that he shows, and there's a reason he created his own broker, is so that he can create a demo account that looks like a live account, just to show social media to ultimately sell his broker, his IB links, and whatever else, his robots. It's a marketing technique. Yeah.
Stuart, I just want to answer Stuart's question. If I get to the point where I make more with trading than the business makes, is when I will go all in. Until such time, I'll keep learning and trading such full time as the long-term goal. Stuart, in my opinion, I wouldn't ever lose the business, because as soon as you lose the business, you immediately become reliant on trading for income.
That business will always be your foundation.
Exactly. I mean, you would do so, if in my opinion, I'm not saying you have to, I'm just saying in my opinion, I would prefer to keep the business, even when you do make more money with trading, because then, the trading money almost becomes, you can use it for different things, where you'll have the two streams of income. Because I think that's what full-time traders actually strive for, is the business that you already have. So it's easy to be like, okay, I'm making more money with trading, so I'm immediately going to switch over to full-time trading and not worry about my business. But I would say keep the business, because as soon as you switch over to full-time trading, it becomes your bread and butter, and it becomes a lot more stressful than it's supposed to be.
And long-term, you could also look at employing somebody to run that business for you while you trade. And that business becomes a little bit more passive, requiring less on-hands work. You check Joash Naidu? Yes, I know him. I've met him. He's just a marketing genius on social media. That's all I'll say. I see a lot of guys. Okay, yeah, we answered that. What's your risk on each trade on a challenge account? If I'm trading counter trend, I usually trade a mechanical 3 or 4 risk to reward. That's usually the pullbacks or M15 pullbacks. Then I usually risk 1% per trade. But if I'm going for the long runners, those 10, 20 runners to target the swing week highs, I usually risk between 0.1 and 0.3%.
Agreed. Thanks, guys. But thought more in terms of employing someone. Yeah, no, then I would agree with the other 100%, Stuart. Employing someone and then having your business being a bit more passive when you can focus on your trading, because then you'll still have the income. Perfect.
Diversification is key. Very true. Optimize your business so that you can spend less time running it. Yeah, very true.
I think misconception nowadays is that you need seven streams of income to make your money. I don't agree. I think you need one stream of income, or you need one or two that you are really good at, and then when you have the money, then diversify.
Yeah, that's very true.
Now, diversifying when you've got nothing makes no sense, because you've got nothing to diversify with.
Let's quickly check what news we have for the rest of the week. Yeah, unemployment claims later today at 3:30. Tomorrow nothing. Oh, yeah, tomorrow's today. And then tomorrow is just GBP. Yeah, so nothing major for the rest of the week. Yeah. Yeah, guys, then I definitely think for, going forward with future streams, especially starting with tomorrow's streams, we'll do a lot more giveaways involving you guys as well. And then, yeah, as the streams go along, if we do get trade plans to play out on stream, we will execute that as per our rules. But there's a big reason, again, like a couple of people I think mentioned earlier, are we going to trade live? Are we going to trade live? We're not doing these streams for the sake to force out trades for you guys. We want to let you see what it's like having that consistency, formulating that trade plan every single morning, and rather teach you, again, to be independent at it yourself. Okay.
Awesome stream, guys. Gym time. We'll see you tomorrow. Cheers, Lloyd. We will see you tomorrow.
Yeah, guys, without further ado, we're going to call an end to the stream. We've really top-down analyzed some nice major pairs this morning. Again, if you guys have any questions, for those of you that are inside of the MM-funded mentorship and community, you can just post there. Otherwise, the guys that aren't, welcome to send myself or Hein a message on Instagram. I'm very active over there. I'll most likely just respond with a voice note. Yeah, then we'll start the stream same time tomorrow morning, probably about 10:30, as I will first do the live stream with MM Funded in the morning. Then we'll hop onto YouTube recapping what we did in the morning, and also going over for a potential trade plan going into New York session.
CPT has cooled down, now Bush is running. Yeah, I heard Cape Town has had some scorches of days the last few days.
Alrighty, guys, we're going to hop off in the next few minutes. I will post the new link for the stream tomorrow morning, well, this afternoon as well, so that you guys can set the bell on for the stream tomorrow, so you'll get a notification as soon as we hop on live. But epic, guys, thanks for joining
the first stream. Yeah,
I hope you guys got some good value, and Hein and I will see you tomorrow morning.